What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, guys. Welcome back to another live stream. I'm dropping the where's my 8cap link? Hold on. Links. Oh, I don't know where I've got it. Hold on. I'm gonna do this. YouTube description. 8cap. Here it is. Okay, there you go. If you're interested in getting access to EdgeFinder with 8cap, I mentioned that link would get dropped. There it is. No producer today. I am the sole showrunner here. Now, of course, we have other hosts coming on after me, but usually we have James from our team fronting the booth here behind the scenes. But he is actually headed over to the beach. He's having some vacation time, well deserved. So I hope he has a great time with it. And in the meantime, you're stuck with me as the sole runner of the A1 Trading live stream today. The stock market keeps going. What's gold doing today? Gold's up a little bit today. Silver's up a little bit. Oil's up a little bit. Bitcoin still struggling here to get anything going. Yields are flat. And the dollar is actually slightly up today. Let's see what else we have. VIX flat. Currency land, you have euro slightly lower, pound dollar, dollar yen. Currency is kind of quiet as well. Very interesting. As we get started here, we'll be discussing a little bit, of course, on the macro as well as technical side of things, some of the current moves of the day. If you have a chart request, if you have something you'd like me to look at, feel free to drop it in the chat. I'll be taking some requests today. We'll take a look at some charts, and should be a good show as always. So S&P 500 here, breaking to new all-time highs. And that's all the rave, right? That's the conversation right now is, oh my gosh, we are at all-time highs on the S&P 500. And I have to say, I know that this is like a shocker, and people like there's a lot of people who are very annoyed by this. They're like, how the heck are we back at the all-time highs when the Strait of Hormuz is still closed? And you know what's crazy about it though? This is like on par with wartime game plan S&P 500. What I mean by that is that wars have, like, historically speaking, had a very similar play card for the S&P almost every time. Of course, there are exceptions where war leads to prolonged pain in the stock market, but most of the time, a year later, after a war starts, the S&P 500 is higher. Is that not such a weird statistic? But it is a reality. If you look historically at the S&P 500, I invite you to go do this because I've researched this like 37 different times. When the stock market falls on a wartime event, most of the time, majority of the time, there's a sharp move higher following it. Why could that be? Well, it's because one of the most simple things in the stock market you have to understand is one of the reasons it's so hard to be a bear is that the market starts to shrug off and desensitize to scary things happening. We saw this with COVID. We saw this with the tariff stuff last year. We're seeing it with the Iran war. It's scary at first and people panic. And then the market starts to not care about it anymore and starts thinking of the next thing to care about. And so what is the next thing to care about? Well, right now, starting out, we are going into earnings season, which matters a lot if you watch stocks, if you trade the indices. You have to understand the earnings of companies being released matters a lot. It's kind of like a CPI day or an NFP day for the dollar, right? That's like your earnings reports, especially for big corporations within the Nasdaq, S&P, et cetera. So we have that stuff starting off, and there is an expression, or not an expression, but an understanding that typically banks and financial companies go first in the earnings season. And because the earnings reflected by banks are so intertwined with the economy underneath, it matters significantly because a lot of times as the financials go, the rest of the earnings season typically goes. So if banks come out and they show promising numbers and promising stats about the economy, typically corporate earnings for the rest of the major corporations tend to be more positive. That is kind of what is brewing under the surface. In combination with another little theory that I have, which I'll get to in a second about the Iran war stuff. But first and foremost, I think that's really important that we mention. Why are stocks rallying? Corporate earnings from banks looked really promising, which also bode well for the upcoming big hitters. Amazon, Meta, Google, Microsoft, all the big names, right? The market is sensing out, oh, they may have good earnings too. And so good earnings in the long run is going to trump uncertainty around war, right? There's another thing that I have a conspiracy about, which is, does someone know something, right? With the move higher here, this is such an aggressive move, and I'm not in any way crying manipulation or the market's rigged or whatever. What I'm saying is, like, modern markets, there's something interesting happening where there's like there's a lot of accusations of like insider trading on like Polymarket and Kalshi and all these betting markets where somebody who knows something kind of like rushes to the betting odds and hits the bid on something and makes a bunch of money. And modern markets are very smart. So maybe someone did a big bet that knows something about how developments are going privately behind closed doors, and the stock market picked up on it. What would confirm that belief of mine, or that suspicion of mine, would be that if you had an announcement of the war being officially resolved to an extent and the market barely moved, then that would tell you basically somebody knew something, price it in before the news headlines hit it. This is so important that I say this. That's why I don't try and play the geopolitical game. I cannot tell you how many comments I have right now in my comment section. People saying, no, the market's got it wrong. The Strait of Hormuz is closed and it's going to be a disaster. Look, maybe, but here's what I want to point out. By the time we hear news, by the time you and I, us mere plebeians, once we hear news about how something is going, someone who has more information than us knew well in advance of that. By the time it hits the news, the price action is already there, right? Why do I say that, and why does that matter? Well, because that's why I don't play the geopolitical game. I don't try and predict, oh, the Iranians are going to do this next, and then the US is going to do this, and Trump's actually going to do that. I don't play that game because I can't predict it. And even if I try and predict it, someone who knows more than me simply has the information and is moving in the markets before the headline even hits, how could I possibly compete on that? The answer is I can't, right? So I can't predict what Trump's next post is going to be. I can't predict, like, you have to understand what things you can make decisions around and what things are silly to do. So when you see somebody who's like, the market has to go lower, the Strait of Hormuz, this doesn't make any sense, the market's rigged, that person, unfortunately, I'm not trying to be like harsh or rude, or I'm trying to be like honest. That person is ignorant to the reality of, by the time you get the news, smarter people have already been told that information and have already made moves on it, right? So that's why when it comes to geopolitics, what do I rely on? Price only, right? Because I cannot predict, the headlines. Now, I may look at geopolitical risk actually more as a contrarian indicator. Let me show you. We have some tools for this, and I've got a lot of tools to talk about. I'll show you this geopolitical risk tracker. We've been building this tool. It uses AI to read headlines on geopolitical risk. And when geopolitical risk is elevated, you could actually take this as kind of a sentiment gauge, right? This is almost a sentiment indicator. When headline risk is really high and everyone is panicked, which they still kind of are, right? There's still a lot of headline risk. Our score goes from 0 to 100, still at 75, right? So we could take this as one of our sentiment gauges, our powder keg gauges to an extent, right? So that has something meaningful in the form of sentiment. People are still worried, and crowd sentiment is interesting because it's shifted. I've got so much stuff to show you guys, and I've only got 20 minutes left. So let me buckle in here. Let's do some research. In recent developments, put call ratio screamed to the call side. My friend Chris Pulver sent me a message. You guys know him if you watch the show. He comes on frequently. Chris sent me that was the lowest reading in the put call ratio in many years. I don't know exactly the number of years, but many years. We've not seen a more jolting to the call side move in the put call ratio in a very long time. So that makes me think, okay, the bulls are like going crazy. But then there's a little bit of a slower read on sentiment that would say the opposite. However, this did update. Look at this. Crowd sentiment here is still pretty pessimistic. So you have the market back at all-time highs, and yet crowd sentiment is still 43% bearish. Interesting stuff. So studying sentiment today, we have kind of a conflicting thing. So I would say short term, right? I would say that what we're looking at, the AAII investor sentiment, it's a little bit more longer term. Longer term indications would say the crowd sentiment is very bearish, and short term indications through the put call ratio, which would tell me crowd sentiment is very bullish. So you have kind of a mixed sentiment there on our two main sentiment gauges for risk on, risk off. So what do I do with that? Well, okay, so that's kind of mixed. In the short run, if I looked at this, right, I would flip these signals personally. So if I look at this, what I would say is that short term, I could see us getting a little bit of a pullback, and longer term, I think there's some viable dips. Just reversing crowd sentiment here. Crowd sentiment on the longer term is still super skeptical, super bearish, super worried about the market. And on the shorter term, we saw like euphoria buying on the call side, like absolute euphoria buying. That's crazy. That put call ratio went absolutely nuts to the downside here, showing huge amounts of call volume hitting the floor. Okay. Really interesting stuff there. And we'll see what happens with S&P 500. What that would indicate to me is like you could get a little bit of, there's some pain to the downside in the short run. So even if you just had a modest, 1 week pullback in the S&P 500 here, which I think is perfectly reasonable to think we could have, you've had just a straight shot, like a moonshot here to the upside, 11% rally in 16 days, 12 trading sessions. Unbelievable, right? That's just unbelievable. There's more I have to talk about because I also want to compare what the S&P 500 is telling us to what other markets are telling us, because they're kind of contradicting one another. We'll talk about that in just a moment. But from a sentiment perspective, I also have to show you guys something really exciting that we just added to the EdgeFinder. So I talked about this one. I changed the name. We changed the name to COT Velocity from COT Trends. Now, I know that sounds like a minor detail. Why am I bringing it up? It's because we added another COT chart today. We did back-to-back drops on new COT charts. If you're an EdgeFinder user that likes commitment of traders stuff, if you like tracking smart money, if you like tracking institutional flow, then we have got some presents for you. Christmas has come early. Christmas in April this year, man. You can't beat that. Basically, this new chart, if you have not seen this one, we're calling it the COT Velocity chart. It shows you the week-over-week change, the month-over-month change, and the quarterly change for all of your favorite assets, right? So we track all this stuff, the commitment of traders data, but then what we do is we show where money is flowing in and out of the fastest through our COT Velocity chart. So check this out. Russell, Nikkei, SPX, like we're seeing those things get some heavy accumulation in the last 1 week. The Nikkei getting a lot of accumulation on the last 1 month. And we can even go out to 1 quarter to see like the longer term moves versus the shorter term moves of institutional activity. Really cool stuff that we've been adding there. But check this out. I got another one for you. We also added today the COT Trends tab, which is we're now calling this the COT Trends tab. And yes, and the other one is called the COT Velocity. What is the difference? Well, the COT Trends table is perfect for people who want to compare the COT flow of a couple different assets at once on a single plotted time chart. So let me show you. What we can see here is that you have, for example, at the top of this is gold's positioning from institutions over time. Now, I know we have a couple selected here, but we have pre-populated a few, but there are many. So we could actually, for example, let's say you really cared about oil, the dollar. Well, let's just say you wanted to look at oil and the dollar. You now have US oil and US dollar and the institutional activity within them plotted over time. So they've been adding to oil longs. They've kind of flattened out on oil positioning in regards to their accumulation. The dollar, they continue to overall accumulate dollar, right? So you can do this with whatever you care about. If you're somebody who trades gold, if you're someone who trades the Dow, if you trade, whatever you trade, right? You can now plot the COT data in the simplest form over time, giving you an idea of what institutional activity has been doing in the past, bit of time. So we've been, really excited about all the different COT tools because it's one of our most popular things that people like is tracking institutional money. I also love doing it myself. And so having the right tools to do this stuff in a very simple and way that you want to manipulate it to look at it the way you want, we're trying to give those options to our users. So I just wanted to mention some of those new features. Of course, you still have all of our classic charts here for tracking institutional activity, like the latest COT report. And of course, COT data history, which kind of gives you one asset at a time in very granular detail. So you have all of this in the EdgeFinder now. If you already have EdgeFinder, there's no additional charge to this. It is just added to your EdgeFinder. You can now access it under COT data here. If you don't have access to the EdgeFinder, let me go ahead and do my little plug here because we are doing something big right now. You can currently get 45% off for a limited time if you are watching during the live stream and you click this link or scan the QR code that is just below my camera. Our tools are on mega sale right now. It is our 4-year anniversary since launching this product to the public. And to celebrate our 4-year anniversary, we are doing our biggest sale of the year. So take advantage of it. Scan the QR code below me if you want access to a payment plan, if you need extra discounts, etc. Just click the link there, speak to our team, and they can get you set up with some of our best prices of the year. Thank you for sitting through my plug. They're really remarkable tools. We've been working really hard to level everything up on EdgeFinder and continue to provide what I believe to be the best tools for the average retail trader. It's the stuff that when I got started in, trading, I dreamed of having stuff like this. And now with the wonderful people on my team, we've been able to build some pretty remarkable stuff. So take advantage. Don't miss the sale. Let's see. I also wanted to take a look at gold here a little bit this morning. So gold on a 4-hour chart, is it starting to show some life? This was something I wanted to bring up. Okay, so if you are looking at the S&P 500, right? You're looking at it and you're saying, so no big deal, right? Iran war is all good. Everything is done. We have no problems. Clearly, the market is rejoicing. But not every market agrees. Look at gold. Gold has not recovered fully from the effects of the US-Iran war. What else has not? Like, let's think about the retracements here, right? Nasdaq, S&P, and gold have been moving together. But notice the relative weakness in gold. And notice something else. Look at the dollar. The dollar, yes, it has come down, but has it erased all of its geopolitical risk premium gains? Not completely. And mostly, most of it, yes, but some of it has remained. What about U.S. oil? Are we fully in the clear with oil prices? Not quite. We're still at 92. 92, if we were to assume 92 was going to stay the case for oil for a while, that would still cause some problems. Like if we stayed there for 3 months, 6 months, that's going to bake in some inflation into the picture, which could be painful for markets to grapple with. So, you know, we know that the Iran war pretty much started in March, right? So right around this period of time, what you'll notice is that if we look at oil, has it retraced? Yes. Has it erased fully all of its wartime concern? No. And let's keep going because there's more that we can talk about. Let's take a look at TLT. This is going to be bonds, right? Have bonds erased the wartime move? Peak to trough, dropping pretty sharply here? No. Yields continue to remain elevated. What else can we look at? Euro dollar. Euro dollar's pretty much erased all of its war move. Dollar yen. Dollar yen. This one you would kind of expect to move somewhat sideways because yen is also risk off. However, still not fully erased its move there. The point that I'm just trying to make here, I guess volatility has erased most of it. Some charts are not fully agreeing that we should be fully relaxed. And I will say this, I am not bearish or shorting the stock market, but I personally think that the bigger risk right now is to the downside. What do I mean by that? There's always risk to the upside or to the downside. Risk to the upside if you're short, risk to the downside if you're long. I think that the greater risk right now is risk to the downside personally. We had a lot of different things that were kind of holding us here previously. I don't know that the market is going to be able to continue this one-shot directional move given some of the other price action that we just discussed. Notably, oil prices still elevated, yields still stubborn. So when I look at the S&P 500, the Nasdaq, the rally that's gone on here, I mean, these are the most interesting charts to me right now because you just have unbelievable recovery move. When I look at these, do I think that they are sustainable at this trajectory? The answer would easily be no, right? That doesn't mean it has to come down or that I'm short. It just means that we could go sideways for a while. We could maybe come down a little bit. Maybe we start to drift very slowly higher. But I think that there is a small probability that you see this chart just melt up into the heaven from here. It's my personal opinion, and I could be dead wrong. You know what I was dead wrong about? I thought that well, actually, I don't know. Let me rephrase that. I don't know that I was dead wrong about this. I mentioned that I think that when you get some kind of a ceasefire, like officially, like or even more than a ceasefire, like the war is over type of thing, that gold would be one of the first and strongest rebounders. It's not been the case. I've been wrong on that. But it's because there's an interesting thing happening. I think we can all kind of agree to an extent that the posturing of the stock market is incredibly optimistic. Optimistic doesn't mean wrong, but optimistic means optimistic. The market, the stock market, the Nasdaq, stocks, equities, etc., are incredibly optimistic that everything is going to be good with the Middle East. And as I've mentioned previously, my suspicion is that someone knew something, made a big bet on poly market, and the stock market picked up on it, and that's why the market ripped. Something tells me the way this market is moving. Let me tell you something. This movement right here looks exactly what I would expect if there had been an agreement reached. So my suspicion is that there was an agreement made, and it's not publicly knowledge. It's not publicly known. Let me put my tinfoil hat on for a second. Hear me out, right? My tinfoil hat tells me this price action is the price action of we've got a deal, all things are good. So my suspicion is we do have a deal, things have been resolved, but it's not publicly accessible information, and insider trading went rampant. That's my fun theory. I have no basis to prove that. But does that seem logical? Like, I don't know. Does that make sense to you guys? Give me a 1 in the chat if you think like maybe someone knew something. Like, okay, yeah, you guys are saying it makes so much sense. Like literally this price action, if you had showed me this price action and I didn't know what the headlines were, I didn't know what the news were, I would say, oh, heck yeah. We had a deal. Like a straight up dominant deal was made. And yet there's nothing like that in the headlines right now. This is why, in essence, I don't predict geopolitics, is because I would, like if we were sitting around a bonfire and it was late at night, we were having a drink and just chilling out together, I would say to you privately, I think someone knew something. And I just said it on YouTube. But I mean, I have no basis for it. I can't prove that. I'm just pointing out that I think markets oftentimes know something before everyone else. And so I don't try and make predictions on that sort of thing. There are so many people who unfortunately made the trading mistake that many people do when they get started, which is thinking they know how they can predict the headlines next, when in reality, the headlines are super, super behind what's actually happening. Right? So that's my theory. I think someone knew something. I think a deal was known. And that's the only reason you got such obviously decisive price action. So yeah, you can complain and say this is manipulation, it's rigged, I'm losing money because someone's cheating me, or you can just accept reality and just say someone always knows something, and you can't beat that. So don't try. Right? That's my opinion. Don't try and beat what you can't possibly beat. You and I are not sitting we're not sitting in the table room, or we're not sitting in the boardroom having these conversations. Someone else is. And so then what can we do? Well, we can look at technical trends. We can follow along. We can say the market probably knows something, so I'm going to follow the market. I can also look at macro, and I can get a bigger picture view, because macro, what's nice about macro is that it's a kind of a less like these headline events, these sort of like traumatizing, posts and tweets and oh my gosh, this just happened, and President Xi's going to do this, and Trump's going to do this, and Iran's going to do this. Like that is such a hard game to chase and play around with. But what I feel much more comfortable in doing is looking at some of the statistics, some of the data points, and just saying, what kind of environment are we in? Okay, we're in a healthy risk-on environment. Cool. Fundamentals improved further for the stock market in the sense that we had a cooler than expected PPI. All right, take that, just take it as is. Leave your bias out of the picture for a second. I can't tell you again, guys, we're doing it again. People are politically like, oh my gosh, I hate Trump. This market can't go up, and losing a bunch of money because of it. Do not do it, man. It's like I say it so often, and then I get comments anyways. Trump's ruining this market. He's rigging the market. He's manipulating. I'm losing money because of it. You're not losing money because of Trump. You might not like him, perfectly fine. Some of the stuff he says is just wild. But regardless of whether you like him or not, he's not the reason you're making or losing money. Your own trading strategy, how you manage when you're losing, how you manage when you're winning, the sizing of your trades, you have to take ownership as a trader. And if you don't, you will chase your tail forever in trading. Because guess what? There's going to be someone else after Trump that you could cast blame on. Or you could just take full ownership and take responsibility. And I promise life gets a lot easier and a lot better when you start taking ownership of your own stuff and calling yourself out. Like, oh man, my trade was too big. Like, yeah, the Trump tweet blew my stop loss out, but you controlled how big that trade was. And if that stop loss getting hit wrecked your trading account for the week, Trump did not do that, whether you like him or not. He didn't do that. He didn't size your trade accordingly like that, right? How you choose to size your positions, when you choose to trade, stop loss placement. There's so many things that we can control in trading, but there's a lot of things that we cannot control. And you cannot control because you know what? The next Trump tweet might actually go in your favor, right? So you can't control that. Like some are going to go in your favor. Some are just chop it up. Just accept. I'm going to position size small so that when I'm wrong, and it's not going to kill me. But anyways, S&P 500 is getting a bullish reading here. So we had jobless claims here this morning came in better than expected, and that flipped our jobs market bias here to very bullish. And I'm going to reiterate that the jobs data here recently has actually been better than expected. And again, remember when I just said, like, leave your politics out of this for a second? I have seen so much. Every time I talk about the jobs market, I get a bunch of people say, oh no, Trump's manipulating that. Stop it. Get some help. The Michael Jordan meme, right? Like, relax. The jobs data is better than expected. Take it for what it is. And don't, let the jobs market can't possibly be good because I don't like Trump. If you do that to yourself, you're going to just deny conflicting data to what's in front of you. So instead, look, you may perfectly not like Trump. That's perfectly fine. But the jobs market is bigger than Trump. The economy is bigger than Trump. He's just the president. And the president doesn't ultimately control every aspect of the economy. Sure, he can cause big spikes one direction in an intraday move, but the business cycle is a 30-year cycle. The economy is bigger than the 4-year cycle of the president. And so anyways, we've got to throw the show over to our next show host. We've got Alan Perez here taking over in just a second. What I want to leave off on is, again, just follow the macro and trend data. You will be better off, in my personal view. That is just far, far superior than trying to overlay your personal biases on, the jobs market can't actually be good because, it's not, I'm not saying it's good. I'm saying it's better than expected, right? We expected to have 65,000 jobs added to the economy. We had 178,000. That was a much better number than expected. Now, it may change next month, but right now, here and now, as a trend followed, the trend improved. The jobs market data improved, right? So stay level-headed, ignore the news headline, or at least when you look at news headlines, try your best to take that, bias out of your trading, because it really, if you can't, then stop looking at headlines entirely. I know it's hard to do, but do your very best. If you can't control your emotional, like, oh my gosh, stocks are going to fall, they have to fall. If you can't control that, then it's probably best that you just ignore headlines. And instead, what I like about macro data, like, look at this. There's no bias in this. Like, regardless of what you bring to your bias here, the reason we have scorecards on EdgeFinder is because they show no bias. It's algorithmic. It's systematic, We look at PMIs and we compare them to what forecasts were from the economic community. We look at CPI versus what the economics community expected, and we weight our trades, we weight our biases here based on what the data is telling us. We look at price action to follow trends, and there's no need to stare at the headlines and freak out about what's happening or who said what. We just look at the data that's coming in. We try and build a logical trade plan. We've done it for years, and we'll keep doing it. If you don't have EdgeFinder, like I said, scan the QR code, click the link in the live stream chat to speak to our team about getting set up with a copy of EdgeFinder at a huge discount right now. I'm going to switch over the stream here to Alan Perez, who's going to be taking over after this break. I am solo running the show, so let me play this quick ad break, and then we will have Alan taking over the stream. Stay tuned. He's up next just after. Hold on, I got to find it. Here it is. All right. Ready, set, go. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Good morning, good evening, good afternoon, everyone. Nick, I'm going to ask for your help on this here. I am in a hotel room right now, so I'm not going to enter into the StreamYard link here just so I don't expose the link there. So I am on a one monitor setup here. I do have my iPad here so I can read the chat. However, yeah, I'm not going to go into the StreamYard to go ahead and expose that link there. So bear with me here, guys. I'm here on my laptop here, but let's go ahead and talk about markets here. And like always, if there's anything that you guys want me to talk over, anything, put that into the chat, and I will do my best to go over those charts with you guys, give you my honest thoughts and opinions. But okay, let's get started here with the dollar index. Something that I was on the road yesterday, and so when I got into the hotel and I really started looking, I was like, okay, dollar index is here at this awesome level of support. However, I glanced at the equities markets and I was like, holy crap, we are now at all-time highs. So seems like this is a monster run up here. So yeah, I was talking about this with Marco in previous streams, how I want to be careful as far as chasing these highs, and to everyone else out there as well. That could be very tricky, just because if you do a market order, we talked about it here, right? Like at the 6,800 handle, you do have so much risk to the downside here. Now, even more here, if you were to do a market order at all-time highs, I know that could be very enticing. I know a lot of people are trying to play the momentum breakout game, all that good stuff. Again, this is a monster run up here, one directional push. You do have so much room to the downside if something were to happen, right? A lot of this rally is more off of to one of the Discord members, the contrarian, hopium, right? This is not a solidified end to the war, right? This is just talks progressing, things like that. And so, yeah, this could very well roll over if there is a disappointment in the headlines as far as the war in the Middle East. So, yes, market is moving here pretty aggressively to the upside. However, I would stay away from actually, buying this market because there's just so much downside risk. I would rather wait for a meaningful pullback. And for me, that meaningful pullback would be somewhere around these moving averages here, whether it be the 50 or the 200 day, or even the support. However, I am aware that, a pullback that deep may not even come, right? Especially with a market that is so aggressive how it is right now. But just putting my Fibonacci retracement levels here, this 38.2% and the 50 lines up right within those moving averages. So that's kind of my level in the sand here that I have right now. That's where I would, patiently wait for a pullback to participate in this market. And that goes for all the major equity indexes here. You have the Nasdaq, the Dow Jones, all of that. Same kind of, price action there. So I would wait for a meaningful pullback before I go ahead and participate. All right, let's go ahead and see the chat here, guys. I know I am on uh, a setup here. Bearish, not bullish. Alan, acknowledge it. I think you're referring to the stock market fallout. I would say it's pretty bullish to me. Yeah, literally could not believe we hit all-time highs. I know. I was like getting into the vicinity, the city limits, and I was at the gas station, and I checked TradingView, and I'm like, the stock market's at all-time highs. That's crazy. Um, what about short term? And then we can continue KDX, DXY. Yeah, I'll go over everything. So short term, I think that markets could possibly continue with a lot of momentum, right? Again, this could be one of two things. This could be one of those markets where it is trading at all-time highs, and then it can be disappointed, and then you get that meaningful pullback. Or it could also be one of those environments where you are getting shallow pullbacks, and every single tiny pullback is bought into, right? That's definitely a possibility, especially in the equities market here. So I want to be patient for a meaningful pullback just because of the idea, or not the idea, but the fact that the war is not officially over, right? That is still something out there that can very much disrupt this market. So I'm going to be waiting for a meaningful pullback. Um, I'm not going to be trading the stock market here. So I know you guys are interested in what I do, like trading the dollar, Forex, all that good stuff. So the way I would participate with that is with the dollar index, right? Somewhat. So we are at a level of support here. So my personal view is that we may find a little bit of a bounce here in the dollar index. Perhaps we trade into the 98.5 handle, where you do have these moving averages here, the 50 and the 200 day. That is definitely a possibility. And then you go ahead and fade that, or you go ahead and get up into 99.5. But again, you ultimately fade that. So my current view here on the dollar index is that any rallies are likely to be faded. So then it just becomes a question of, what levels am I looking at to go ahead and fade those rallies? So I like 98.5 and I like 99.5. Ideally, the higher the better, right? Especially we go ahead and fill this gap here. This could also be a strong level of resistance. If you guys remember with me here, when we were getting the initial safe haven dollar bid, you can see here that we were basically rejecting off of this 99.5 many times. We had these strong wicks here. And we all thought like, okay, maybe that's the ceiling, right? So I do think that if we were somehow to make our way back into this area, I do think that this will be another, point of strong resistance here, and then we can go ahead and fade that. Trades that I'm looking to take, I like Aussie dollar a lot here. That is back on my radar. I had some success with the Aussie basket as a whole earlier in the year, so I'm definitely looking to go ahead and play that game as well. Again, I would be waiting for a meaningful pullback. This is the level where I bought at last time here, so around this midpoint where this 50-day moving average is at. So I would wait for a pullback into here, or ultimately at the lower ends of this channel here, this level of support at 69.5. So I do like that. As far as the EdgeFinder confirmation goes, you do have the equals, or the strength index here for the currencies, and the Australian dollar is very bullish here. It's at the top of that list. So I do like to see that. And also too, it's actually getting progressively better. So if you look at the right hand top right hand here of my screen here, you can see that this little triangle, that just means the change, recent change, and it's actually increasing there. So not only is it strong right now, but it's actually getting progressively better. So I do like to see that. If we go to Eagle Surprise Index here, just to kind of see how things are going, you are actually seeing it here towards the bottom here, right? So it's kind of missing expectations. So if you were to see this start to move the needle to the right there, like if you see more data releases for the Aussie dollar and they're getting better, then I could actually see some more momentum in the Aussie dollar. One thing that I'm looking to do here, or possible thing as well, is a break and retest. So if I go down to a weekly time frame on this chart, you can see here that we are at a very solid level of resistance. This has been very solid for a very long time here. So ideally, like I mentioned, I'm waiting for a pullback, right? In risk, I want to take a bullish position here on risk on currencies. So I'm waiting for a pullback here on the Aussie dollar, ideally at that 50-day moving average. That way I'm below this breakout zone. But another possibility, right? Like we're seeing in equities where you have this strong momentum push to the upside. Another thing that I'm looking to do as well would be a break and retest of this solid level of resistance. It's a possibility that you never get the pullbacks, right? So this market here, Aussie dollar, has been ranging between these two zones here for some time here, and I do think if we get a breakout, then it's very possible that we can target something like just looking left here, 7,500, 0.7500 would be really good. 0.7400 would be good as well, I would say. But yeah, I mean, I think this is a very strong market. And if you get that breakout, I would really like to buy the Aussie dollar, right? If we remember too, why I like the Aussie dollar, for one, they have a pre-existing motive to go ahead and hike rates even despite the war, before the war even started, right? So they have had elevated inflation. They've been fighting that battle. If I go to the economic data here, and if I look at CPI for the Australian economy, I can definitely show you guys that here. You can see that, look, they are at 3.8%. They're still high at 3.7. But they've definitely said that they're willing to go ahead and hike those interest rates to fight inflation. You can see that they are way above their 2% target. Now, add in the variable of elevated oil prices, especially if they continue to stay high for an extended period of time here. We can look at oil here. This is that initial breakout level here was in the upper 60s. We are still very high, right? And so that can cause inflationary pressures and only add to that already elevated inflation in the Australian economy. So that is one of those trades where they are looking to, that central bank is looking to hike regardless of the war or not. And then, the war is just adding extra fuel to that, very hawkish central bank. So I do like the Aussie dollar. So again, looking to buy that on any pullbacks, or go ahead and buy the breakout level if you get a retest. That doesn't just go for the Aussie dollar, that goes for Aussie CAD. I heard Nick was mentioning this as well, but the Canadian economy, not the best, right? The Canadian dollar has been very much been sold by institutions. So Aussie CAD would be one of those plays that I'm looking to participate in as well. Essentially the same Aussie basket that I was playing. And look at that, Aussie CAD doing way better. Had I just held this trade, this would have been a phenomenal one. And that kind of goes for everything as well. So Aussie dollar, I got out of it when I did. Aussie CAD, Aussie Swiss, and they are working out just fantastic. So kind of shot myself in the foot there when it comes to exiting those positions when the war started. But again, I was kind of under the perspective that risk on currencies are going to take a little bit of a dip, and they did. However, they have since went ahead and came back in play. So I do like that. I do like that they are back in play very strong. As the war is starting to what seems to be making an end here, and talks are progressing. So yeah, looking to go ahead and play that Aussie basket once again. Let me go ahead and look at the comments here. There are better opportunities like sitting on the silence and keeping my money. Sluggy said, yeah, that's kind of what I'm doing here right now. I am flat. I am waiting for pullbacks and risk on currencies. And when they come, I'm definitely going to act on those. But for now, I just have to be patient because, anything can happen, right? Maybe get an escalation. Not saying that I want that to happen, but that's definitely a possibility. And so I want to be on cash and ready to act accordingly. Do you think Bitcoin is starting to rally for the summer? Premium Bro said. Let's go ahead and look at Bitcoin there. From my understanding, it's been holding up quite nicely. Yeah, so Bitcoin, you could say, is a risk asset. I mean, it's definitely one of those risky assets there. And it's been holding up quite nicely despite the war. The war started at the beginning of March or May. Sorry, March or May? No, March. The beginning of March. It was that weekend. You can see here that it's kind of just chopping, right? It's not making these lows like the stock market did or like some currencies did. It's actually holding up quite nicely as well. So, to answer your question there, you do have this 50-day moving average. We have been below that for some time here. We broke above it, but now we're decisively below it. And now it seems like price is now above that 50-day moving average. So if you were to get a decisive close, I would say in the 80,000s level, then I think this is a solid level of support here. And perhaps Bitcoin either goes higher or just slowly grinds sideways to higher. So that's kind of my thought process on Bitcoin. I'm not a crypto expert, man, so I'm not going to say too much on that. But just looking at the price action here and looking at how it's been reacting during this whole war, I think that's a good assessment there. So again, not financial advice, but just my thoughts there. H Ball out said DXY, my man, DXY bearish. Yeah, I agree with you. So fading any pops in DXY for sure. Helen, do you think it's a bull trend for pound dollar? Pound dollar for sure, it could be. I mean, the EdgeFinder has been quite strong there in the pound. You can see here that it had a very monster run up here, similar to like the stock market, very aggressive here. We are now at above the 50 and the 200-day. You are now above this level of support here. So I think similar to the Aussie dollar, maybe you get a pullback into the pound dollar and that trend continues to the upside. However, I don't know about how far the upside could be just because they are struggling with the growth, right? So if you add high inflation on weak growth there, it can actually be not the best. So as we get to the upper ends of these channels here, like if I were to mark this chart up here, um, let's see, 1.3800, something like this here. If you were to get somewhere in this territory, which we can very easily get there, I do think that there is some kind of an upside cap just because of the weak growth there in that side of things. So again, be patient, and if you get the pullback, fantastic, participate. However, they do have weak growth, and if oil stays elevated for too long and that causes inflationary pressures, then that could be harmful for the pound dollar. But for now, it seems to be like a strong asset, man. So I don't know if you're in that or not, but that's kind of my advice would be to just wait on a pullback. Bitcoin 250, the wave is to the downside. Okay. We started in March. Yeah, March. USD CAD is at a level. Yeah. So very interesting, right? So dollar here is at a level here of support. Dollar CAD is as well at this level of support. However, you're kind of now going against the overall trade slash momentum, right? If you were to see continued like appetite for risk, then the dollar continues to fall, and then the dollar CAD can easily start trading back into this range here that we've experienced. But from a technical perspective, this definitely looks like a clean setup here. You hit this level of resistance. Now you're at this level of resistance that could turn into support. I would rather buy that if it starts to go ahead and kind of make a V-shaped recovery here at this level of support. But again, you're also seeing some numbers here for the U.S. not coming in strong or missing expectations. So that also kind of hinders that. I think the better approach would be for way to pull back on risk on currencies, especially if you have economies like the Australian there that are looking to actively hike interest rates despite what goes on. I think that's going to be a better play there. But again, I do agree that the dollar CAD here from a technical level is a good look there. However, I don't trade purely on technicals. That's just not the case. So the technicals can very easily get thrown out the window if the fundamentals are not lined up, and that's kind of the situation with dollar CAD. But yeah, we'll see. We'll see what happens there. Cheryl said, "What goes up must come down." Absolutely, absolutely. And the higher it goes, the harder the crash is most of the time. So again, you have to be very careful chasing in these prices. I know it can be very enticing to do so. However, it can be very, very scary if you get some kind of a disappointment in the headlines or something like that. You're waiting for a pullback on Bitcoin, gold, and silver. Okay, yeah, silver could possibly come back, or not silver. I'm sorry, don't reverse what I said there. Not silver, gold can potentially come back and play, especially if you start to see yields start to come down, as well as like inflation, inflation projections starting to come down. If central banks start to ease, for sure, gold can come back and play. However, you have to wait for that to happen. So I would look at the U.S. 10-year yield. It is lowering here a little bit here. Maybe if we get back into the 4.2s, lower fours, that would be pretty good there. However, until you get kind of a ceasefire or like a solid end to the war, I think gold is kind of quite choppy a little bit. But I would wait for lower yields, central banks easing, getting that the cost of carrying gold lower will definitely be good for investors. So kind of my thought process on that. What's your take on Swiss yen? Swiss yen, it was really good. I took that trade. I took a loss on that one. I was early to that one. Again, Swiss yen is quite hard because it is more of a thing that you have to time accordingly. And I got the timing wrong. So we had this very strong upward trend here, and it seems to be continuing in that direction. However, we did get a break in the 50-day and this trend line and this level of support here. So I did enter short. However, this ended up being a loser here as the Swiss yen continues higher. But again, you do have the idea that the central bank of Japan there is looking to hike rates, or not hike rates. Well, they're looking to hike rates, but also intervene if it gets too weak. However, again, that's a timing thing, so it's very, very difficult. So you took a loss there. The hard thing about Swiss yen is that there is no technicals to the left side of the chart that you can basically base off of. So that's what kind of like makes this trade tricky there. But again, I think it's a good trade. At the time when I took the trade, the Swiss yen was actually getting a bearish reading from EdgeFinder as well. So that was an added confluence there. If I look at the actual, let's go look at the top setup page here. I don't seem to see it here. Let me see. Let me include neutrals and go to Swiss yen. Let's see, Swiss yen. Yeah, it's getting a neutral rating, so I really wouldn't touch that right now until you see some kind of a decisive move from the Bank of Japan, I would say. I'm currently long Aussie Kiwi carry trade going well in there. What's your thought process on that? Uh, oh man, Aussie Kiwi, that's a great trade, man. I know for sure that it's doing well on top setups page. Let me see. Aussie Kiwi. Yeah, it's getting a very bullish reading of 11. And then if we look at the let's look at carry trade, yeah. Macro. I want to see what kind of a positive carry you're getting. Aussie Kiwi. I'm not getting a reading there. Let's see. It's getting a null reading, so maybe we can look into that there. Let's see. Okay, so AUD is 410. Kiwi is not showing. All right, maybe we can look into that. It seems like the Kiwi data is not there right now. I would assume you're getting a good positive carry though there, my friend. You're getting a very bullish reading. If we look at the actual chart here, I think that is a monster chart from my understanding. Last time I checked. Yeah, look at that, man. Look at that. Yeah, I would hold on to that thing. Hold on to that thing, my friend, and trail stops. That is a great trade there. I would love to participate if I get a pullback, but again, it may be hard to go ahead and get that pullback. So if you're in that thing, congratulations. And CAD. All right, Cheryl. So we have pretty busy week, 20th April onwards. Risk on currency like Euro, Pound, Kiwi, and CAD. I definitely want to participate in risk on currencies. Max is helping us out here with the headlines. Iran doesn't really like the U.S. proposition, found it unrealistic. All right, we'll go ahead and see. We'll go ahead and see how markets react. I do see that market's red right now. Yeah, it's red, but it's like at all-time highs, right? And it's barely red on the day. So we'll go ahead and see how that develops. But again, looking for any meaningful pullback. It seems like the path is to resolution. The thing is, when does when is the resolution? That's obviously the big question there. XPX just had a pullback on the 4-hour. Okay. Yeah, we'll see what kind of a pullback we see, right? If it's if you see continued headlines like they're not happy with it, whatever. Again, nothing has been solidified, so that makes the rally here very vulnerable. So I'm kind of curious to see how sensitive the market is at these highs for sure. Could be a week. Yeah, it's too early to say. I mean, look, that's one of the things here in this market is that we've been seeing a lot of back and forth where one side say things are going well and then the other side goes ahead and counters that. So that's just kind of the market that we're navigating right now. Hormuz passage will still be paid for Iranian in their view. Okay, we'll see. Let's see what oil's doing. Oil's up 2% on that. Oil's up 2%. You are seeing some a little bit of red there showing in the equity market. The dollar is a little bit firm there. Again, how coincidental, right? We are at this level of support here. So we'll see how that happens. Again, my personal view right now, I have a little bit more clarity about the situation. I do think that the path of least resistance is to some kind of a resolution. So if we can get any pops in the dollar index, I'm looking to fade that, whether it be 98.5 or 99.5. We'll go ahead and see how the market reacts when we get to 98.5. If we do get there, if we breach right through it, then obviously 99.5 is where I'm going to ultimately look for a short opportunity. And again, that's kind of my where I am on the spectrum is from like full on war to a resolution. I'm going away from like in the middle to somewhat of a resolution. The only thing is the timing aspect. But yeah, I think both sides really want a resolution. They just have to appeal to their populations. Let's go ahead and see here. If you guys have any other chart markups, definitely go ahead and send those over my way. Two, we have the EdgeFinder here as well on a sale right now, 45% off. If you go here, look at that. You can get the VIP signals, the stop box, the trading view tools, the actual EdgeFinder itself for 45% off. So I would highly recommend, guys, go ahead and get yourself a copy of that. It is extremely, extremely, extremely helpful in finding opportunities and filtering from the good ones and the bad ones and from the ones that are not, too good. So definitely go ahead and participate with that. Also join the Telegram channel. It is completely free. And as well as the Discord. It is, we do have a free chat now where you can go ahead and go in there, chat. You can share chart markups with each other, talk about trading, all that good stuff. So definitely go ahead and participate with that. Check out gold. I did go ahead and check out gold here again. It's not in play yet. Subi 13FX. It's not in play yet. You still have oil elevated, and that means yields a little bit elevated, and that means central banks are still on the cautious side of things, right? They're not voicing that they're looking to go ahead and presume with cutting rates. So that's definitely going to hinder gold's price action. I do think that you are to be cautious at these higher relative levels here, especially as you're getting out to that 50-day moving average. That could act as a level of resistance. Again, for gold to be back in play, I would like to see central banks easing, yields lower, inflation projections lower, oil lower for the gold, setup to go ahead and reform itself. But again, you did get a solid level here at the 200-day where we bounce up higher. So my thought process is if gold gets anywhere within 4,400 to 4,200 per se, that is a strong level to go ahead and start trading gold again. I think that'll be a good floor, in my personal opinion. So something like this, if we were to get gold somewhere within here, that looks good, right? Remember, we had this really big drop here. We bounced at 4,400. And then we had this other big drop here. We bounced at the 200-day moving average, and then we were kind of bouncing off of that 4,400 as well. So again, if we were somehow getting into that 4,400 an ounce level, I think that is good level of support there. And that was, from the peak to the low, that was a 27% drop. So I think that was pretty good there. Silver, different story. Silver, I think, is going to be sideways to downwards. You've had, historical times where in 07, 08, and or no, not 08, 2011, where you had a monster run up in silver, and then the forward-looking returns when you have these monster runs up is kind of lackluster. So you had here 1979, 78 there in the 80s. You had a monster run up in silver. You had a continuation, and then it ultimately faded and then started to get quiet. Same thing there in 2011. Monster run up. You had a continuation, ended lower here, and the returns were lackluster. Very, very similar here as well. Monster close here. You had a monster run up here, and there's very possible that we continue this 12-month candle red. And if you do get that, then the forward-looking turns, historically speaking, are not the best. So I would kind of stay away from silver. I would stay away from both silver and gold right now. And if it does become in play, I would prioritize gold more than silver.
Hello.
Hey, Marco.
Can you hear me okay?
I can hear you in the background. Yeah.
Awesome.
I can't enter the StreamYard tab because I don't want to expose the link. So you might have to help me there as far as like changing the screens and all that good stuff. But I can definitely hear you. Good.
Sure. No worries. How are you doing? You're traveling?
Yes. Yep.
Nice. I think we had some news just now. So if I flip to my charts, so Iran's planned Hormuz toll to be paid via Iranian banks. This was basically risk off. So dollar up, stocks down, oil up as well. Any thoughts on this? To be honest, I can see why it's risk off, but I don't see why it's such a big deal that it impacts the markets, like in the long term.
Yeah. I kind of, if you can answer me this question, Marco, I was for the past 2 days, I've been a little bit like busy away from the computer there. Is this the first like negative headline we've seen, or have we seen some back and forth still within these 2 days?
No, we saw some stuff. So we
Okay.
saw, for example, Iran. We saw, for example, the US sends thousands more troops to the Middle East as Trump seeks to squeeze Iran. But looks like the ceasefire is prevailing for now, and risk on is prevailing because S&P is, of course, at the all-time highs. But here and there, you get some risk off news. So net, I would say we're still risk on with a few cracks.
Okay.
So I also think that US and Iran should be getting together for another sort of session of peace talks either this weekend or soon, and the ceasefire may be extended for another 2 weeks. So I think that's net positive. And one more thing, looks like the markets just decided to kind of ignore the Middle East for now. You know, if you look at the Nasdaq, what is happening in the Middle East shouldn't really impact the price of the tech stocks, shouldn't really impact the earnings of tech stocks, and oil being higher for longer is not such a huge bearish catalyst as we initially thought.
Okay.
When I was reading the analysis from like oil analysts, they were saying oil is going to go to 130, 150 in like 6 weeks from the start of the conflict. That didn't happen, obviously. So situation muted for now. Looks like we're back to risk on.
Okay. I asked that question because I was like, man, like I was essentially away, and I yesterday I'm at the gas station and I checked the trading view and I'm like, the stock market's at all-time high. So I wanted to see
Yeah.
if we still saw headlines that were indicating a not de-escalation. You mentioned something about the troops being sent over there to go ahead and squeeze them out. Despite that, markets are still at all-time high. So when it comes to this recent headline here that we've seen, that you and Max have told me about, I think the market's really going to ignore that. And I think they're more focused on the good side of things. So my kind of thought process here on the equity markets or anything risk related is that markets are just grabbing onto that and hoping that sooner or later there is a solidified ceasefire or official end to the war.
Any positions you were looking at?
I'm looking at positions. I'm looking for
Let me
positions
just put
back
the
into the
screen here.
Australian dollar. Oh, yeah, no worries.
Add that. Okay.
I'm looking for positions here on the Australian dollar. Again, monster run up here is similar to the equity markets. So if we get some kind of a pullback here, last time when I bought the Aussie basket, in fact, I bought it within right here where this 50-day moving average is at, and that held as really good support. Now, obviously, the war escalated, and so that kind of took some pressure off of the Aussie dollar here. But again, we are now back at the what seems to be a strong level of resistance here at 0.7200. So if we were to get a pullback here in the 50-day 0.705, I think that would be a good time to potentially take a stab at taking Aussie dollar long. And not just Aussie dollar long, Marco, but I also like Aussie CAD. So that one seems to be making fresh highs there, relative highs here. So what that would look like for me is if I extend this zone here, a pullback into this level here would be good for me. But it seems like, you know what, the whole Aussie basket that I was in is working out quite nicely. I should have never took that off the table. But so basically I'm waiting for a pullback into these, some kind of a pullback to go ahead and participate again.
Yeah, I'm with you there. I'm looking at Aussie-NZD. That's one of my sort of favorites at the moment. So if I just flip the screen, remove this, add my screen. So Aussie-NZD already pumping higher by a big amount, and missed the entry on the 14th and maybe the 15th. EdgeFinder is bullish on Aussie-NZD, which is of course nice. So let me just put
very
it in.
bullish of 11.
Yeah, very bullish. So my favorite at the moment, Aussie-NZD, as far as currencies go. I would like a pullback though. I wouldn't just buy at this level. I would like a pullback. I also saw a comment from Ravi John good day, Marco. I didn't receive any email regarding yesterday's 10K fund account. Let me just quickly go to my email because I think I sent it. Just 1 second. Yeah, I did send it yesterday. Maybe you put in the wrong email address, but I definitely sent it. So contact the A1 trading support, and we're gonna try and get it resolved. So contact support, but I did send the email. Anything else that you're watching? Any stock index?
Not really, man. They seem to be all up there. I mean, S&P is now green on the day, you would say. Nikkei as well. is up there on the day. So as far as my kind of approach would be the same across anything risk related, whether it be the S&P, Nasdaq, the Aussie dollar, the Kiwi dollar, whatever it is. Maybe Kiwi dollar not so much. They're kind of really struggling there, but I would prefer Aussie over Kiwi when it comes to those two risk currencies. But my approach would be the same across all of them. Essentially, wait for a meaningful pullback. This market is elevated. It can be very sensitive if you get some kind of a disappointment. So although it sucks to kind of see this thing run up, I think it'd be way better to get it in on a pullback, whether it be shallow pullbacks, or if you can somehow get the 38.2 or the 50. But again, like we talked about this, Marco, like before, like if you just do a market order at 6,800 6 days ago, right, you had all this risk to the downside. Now, obviously, that thing continued higher there, so maybe I was wrong as far as the timing goes. But again, you are very vulnerable here if you get a disappointment. So instead of having just this much to the downside, now you have this whole thing to the downside. So yeah, that's kind of my thought process there. I think there's a pullback to be made. I just don't know when. The pullback could be at 7,000 or it can be at 7,200. Who knows? But I think nonetheless, waiting for that kind of bounce recovery type situation would be the better approach.
I have noticed that the recoveries after sort of a crisis are getting quicker and quicker. So if I go to the S&P, and
that April recovery was very shallow, very, very shallow.
Yeah, but I wanted to start all the way from COVID, let's say.
Oh, okay.
So COVID, if you're looking at the 20 MA for entries, you got some entries, right? Before you touch the highs. So you got a couple of opportunities. And then the next one would be tariffs, which was another mini crisis. That one was already faster. You got maybe 2 opportunities to get in before we crushed those highs. And now the last one, we just had a straight shot to the upside. So the recoveries are getting quicker and quicker, meaning for us more long-term traders, it's tough to get in. But of course, longer term, it's a huge uptrend. So we're going to get a pullback sooner or later. To be honest, I don't think this is going to continue much at this point. So we broke into the ATH. I think we struggle here. I think we maybe consolidate even. What I don't see happening is just that the rally continues. I think we had the rotation back into software. So things like MSFT had some rallies. I think Oracle as well. Let me take a look. Well, a little bit. Yeah, Oracle as well. So energy companies, I think the money went out of energy into software. So the opposite of the rotation that we had a couple of months ago, where money went from software into just a second. So Ravi John, definitely check the spam folder. And if you can't find it, drop an email to the A1 support team. But it should be there. It should be in the spam. That's basically it from me. A rotation into software, but I think this is now overextended. Looking for pullbacks. Hopefully we do get a pullback to that 20 MA, and then it's game on for buy entries.
Yeah, I mean, to your point, Marco, the past has shown us that whenever the market is relieved, you do get like very shallow pullbacks, and that could definitely be the play. So if you throw on that 20-day moving average, and if you just kind of take some intraday positions along that 20-day, until you're ultimately wrong and you have that big correction or big pullback like we're all waiting for, I think that's also an approach there as well. So that's something I'll probably consider with the Aussie dollar. However, because I've experienced this myself, but with Aussie, the pullbacks that I want, the ones that I'm waiting for, they never usually come. So shallow pullbacks is definitely something on my radar as well.
Yeah, I've had the same experience. Maybe we should be a bit more aggressive. Maybe get in on an initial sort of probe with small risk, like maybe a quarter of the full position. That could be a good game plan. But to be honest, I think I'll just continue waiting for pullbacks. It just fits my style the best, and it filters out all of the trades that I would otherwise take. If I was just chasing the highs, I would probably be in like 8 positions at the moment, which is not manageable. So
let me ask you this. Since we are seeing a firmer rotation into like software and then a little bit of tech there, do you have a favorite stock that you're looking at right now? If you could pick one, what's your favorite stock?
So it's not related to software, but it's basically Avis, which
The car rental company. Okay.
So I'm not looking to trade any individual stocks, but just this is a crazy chart, so I wanted to bring it up. As far as, let me just go to Google. As far as particular stocks go, I do like Google. So
Okay.
I would actually focus on an individual stock, and it would be Google, because Google Gemini is, in my opinion, doing pretty well. It should be even more efficient than OpenAI. Maybe could even beat Claude, but again, Claude is a bit different. So it's not a fair competition. But I think Google Gemini gives Google that extra boost when it comes to the stock price. So if you look at Microsoft and you compare Microsoft to Google, as an example, Google has been holding up much better. It was in a steady uptrend, and I think once we cross into all-time highs, or maybe we get a pullback to 20 MA, this strong uptrend can continue as long as Google Gemini keeps performing well. What's your take on that?
Yeah, I think when it comes to AI, large language models by popularity contest, I think Gemini is definitely up there, like top 3 for sure. You like, I think Claude, like you said, it serves a different purpose. It's more for making workflows efficient, like hard tasks like that. But when it comes to like a chatbot or even visual designs go, I do think that Gemini would be probably the benefactor when it comes to comparing that with ChatGPT. I've personally migrated away from ChatGPT entirely. I now use Gemini for visuals and Claude for like other hard data or like research type work. I was gonna say
Cool.
my favorite tech stock would be this shoe company called Allbirds.
I saw that.
You saw that 1,000% a day. They said they're gonna ditch the whole shoe model and go into AI, and it made I thought it was like 1,000%. It's like 800% in one day. So yeah, similar to that Avis. This
Yep.
thing is a monster here, and it's only $12, man. I don't know.
Yeah, pretty cheap.
We'll see. Pretty cheap. It was once $680 or $650. So we
Yeah.
will see, man.
Maybe Nike should pivot into AI, because Nike has been getting crushed lately. So
They definitely have.
that could be a smart move, and Avis should pivot into AI to boost the explosion in the price even more. So
They should all do it. Everyone should do it. Whole Foods, the grocery store, I think they should just ditch
okay.
the grocery store and just go into AI, man.
Yeah, it sounds similar to the blockchain craze of, I think, 2018, when every single company that wasn't doing well pivoted to blockchain technology and experienced the surge in the stock price. And of course, later on, nothing happened. I think the stocks went back to the initial levels because the people behind the company are incompetent. But the current craze is AI. Just putting AI in the name makes the value go up. And it's crazy. It could definitely be faded, like for the scalpers out there, or for the guys working at S&B Capital, for example. I'm sure they are fading these crazy moves. So there's a big edge behind these explosions and maybe fading them. But
oh yeah, I mean, this move is faded up, I would say, like 50% already. So
absolutely.
definitely a great move there.
And other than Bird, what else do you have in mind? So if you had to pick one stock that you would focus on to short-term trade for the next 2 to 3 months, let's say, like my pick is Google. So what would be yours? You don't even have to be trading it, but something that maybe caught your eye.
If I were like trading it every day, I would say something like a Google, an Apple, a Tesla, one of those.
Okay, cool.
If I were to be playing a longer term horizon of 3 to 5 to 10 years with upside, I would say anything cybersecurity. Like a cybersecurity ETF, I think is definitely one of those things where I think it's not only one of those things where it has to happen. Like you kind of need a lot of cybersecurity, especially in the era that we're going to, and the more tech focus we get, and the more technology we integrate, all that good stuff. So I would definitely say cybersecurity.
Cool. Yeah, I do agree with you. I think energy and cybersecurity is gonna absolutely go up in the next few years, because that is the one thing that artificial intelligence needs more of. Like, it cannot replace cybersecurity, but it's gonna need more cybersecurity to put it under control, and especially energy. I mean, all of the hedge funds that are profitable in the last few years, they are buying energy right now, as far as I got from a little bit of research. So that's definitely a smart move. And you mentioned that you use Claude for deep research, like to get in the data. I've never used Claude, to be honest. I've only used ChatGPT, Grok, and Gemini. But people keep telling me that I should try out Claude. I thought it was mostly an agent that you kind of put on your computer, and then it does things with your documents and stuff. But I never used it for research. Is it pretty good?
Yeah, man, it's really good. I use that for a lot of different things, not even trading related, but you have
Okay.
your chat bot, and then you have what's called co-work, where you give it access to your computer. I haven't done that, but essentially what it's kind of like an open claw type situation where you can give it access to your computer files, and you can do like you can make commands. So like, excuse me, I have a command with Claude chatbot is /source. /source gives me market moving interesting source, things that are happening in the day, and I turn that into like the stuff you would see on the A1 trading Instagram, like stories, stuff like that. So you can basically do a take that into the co-work era or the co-work environment, and do like slash I don't know, /good morning or something, or I don't know, and it'll do things on your computer automatically, or create
Oh,
files and
cool.
things like that.
Cool.
Yeah, it's really, really cool. And then when it comes to like deep research and stuff like that, it has been very effective. It helps me a lot. Yeah.
Awesome. Yeah, it could help with something I've been doing lately. So basically, for calculating how long it will take to pass a prop firm challenge and get a payout, I've been using AI. Basically, you put in all of your stats. So for example, 45% win rate, 1.8 to 1 reward to risk, 1 trade per day, 1% risk per trade. And then you give the account you want to buy. For example, if we're talking about DNA funded, let's say 25K, and then you give a target in terms of the payout, how big the target is, like $500. And then it gives you the exact timeline according to your statistics, how long it takes you to pass stage 1, stage 2, funded stage, get a payout. And it even calculates if you will fail maybe once or twice before you actually reach a payout. So using Claude for that could be smart. I could get maybe an even more accurate answer. I'm gonna look into that.
Yeah, and the live agent aspect of it. So a lot of the like AI is really cool, and the chatbots are really cool as well. But they are all subject to when you initiate a conversation or you initiate a task.
Yep.
The cool thing about having it run on like the co-works type situation is that it's live. So let's say you have a specific prop firm, right? And you can tell it to do like any rule changes that could affect my current risk management style, or cause me to be at more of a disadvantage. Let me know, or alter this, right? And so it's kind of doing that live versus you having to on a daily basis or whatever check to see what's going on. But to Max's point and to KDX's point as well, wouldn't recommend doing it like giving it access to like a PC if you have some kind of an Apple device. They're a little bit more secure in that sense, and that's why people do the open clause on the Mac Minis or whatever. Yeah, I've never given it access to my stuff, guys, so don't think I have or whatever. But yeah, it could definitely be beneficial. I think as it gets more developed and more people use it and things like that, for sure, I would be looking to adopt it. But for now, there's no need for me to do that right now. Like I'm not running a 50 employee enterprise or nothing like that. It's just me myself. So I really wouldn't. There's no need for me to do that.
I just wanted to quickly post the link to the giveaway form. before I forget. So if anyone wants to participate in the DNA funded giveaway, it's going to be a 10K one phase account, and the link is in the comment section. Also, I saw a comment, any recommended prop firms. So we recommend DNA funded, and we have a discount code, which is A1 Live. Okay, it gets you 25% off any DNA funded challenge. So check it out. And then to get back to our topic, AI for me has been a total game changer in terms of research. For trading, I think I saved days, maybe even weeks of research, because nowadays to find a piece of information, it takes a few minutes, and it used to take hours of research. The last thing I researched, I think, was the Bank of Japan intervention. So, for example, it listed all of the times when there was an intervention, and then I got a pretty large sample size to know what to do at the moment. So on USD/JPY, just to refresh the viewer's memory, I'm looking at the 160 level. I'm looking that this level gets defended, and basically I have an alert set. So when we hit it, I'll place a sell position, and I'll either aim for a drop like the one on the 19th of March or the 8th of April, or I'll aim for a full-on intervention, which is a huge meltdown, and that's going to turn into a longer-term short position. We also had, I don't know if you caught this, Alan, we had Japanese Finance Minister Katayama yesterday saying we will take bold actions on FX.
Yeah, I saw that one.
Yep. So it's getting heated up again. Pretty weird that they're mentioning bold action below 160. Usually they get vocal above 160, but it just goes to show that the level is gonna get heavily defended, and like it's not free money, but it's very close to free money if you just sell at 160. Like, of course, a trade can lose even if you put the stop loss above 162, but before you lose a trade, you can get many scalps where you just take profit on a sell-off, such as the one on the 19th or the one on the 8th of April, and we're gonna see how many we get. So yeah, anything else that's on your mind? Anything else that you're watching? Are you still kind of on the sidelines a bit, waiting for a bit more clarity on US and Iran? Or have you now flipped to full risk on? So if we get a pullback, you're gonna be in?
I don't, my personal opinion and then what the market is doing are two different things. If it were up to me, I would wait for a more solidified agreement, ceasefire, end to the war before turning risk on. However, the market does not seem to act that way, and so I kind of have to tailor my approach to what the market's doing, and it's taking it very well right now. So what I would like to do is participate when on a meaningful pullback when it comes to the Aussie dollar. That way, it allows me to be in line with the market, but also wait for a pullback, and then give myself room to be wrong if I'm wrong, right? I don't want to be chasing highs or nothing like that. Hopefully, we get some kind of an agreement, and that just makes me more confident in the bullish approach to risk on currencies. If we were to get a ceasefire, end to the war, then maybe I would be a little bit more aggressive in my approach for buying the Aussie dollar. Maybe I don't wait for a pullback, or maybe I wait for or buy it now and have a wide stop loss to absorb anything. I don't know. But for now, the approach would be to wait for some kind of a meaningful pullback.
Yeah, I definitely agree with you. And at the moment, I'm not yet ready to flip to full risk on and to slap massive risk on, to slap on massive risk in positions, because any sort of headline that is against negotiations and against the ceasefire, we're back to risk off. So the main question now is the risk on environment strong enough to survive any negative news announcements? What I'm recommending at the moment for traders is basically every single day, just go to the top setups page, remove all of the neutral stuff. You get a nice list of very bullish or bearish assets, and then pick the ones that are risk on. So when I filter through this list, and maybe Alan, you have a bit of a different approach. Aussie-NZD risk on, I like it. Platinum, it's a metal. Metals are not doing well at the moment. Bitcoin risk on, looking to buy. Russell stock market, looking to buy. Aussie CAD, I do like. Copper, no. Aussie Swiss, yes. Pound pairs, personally, I wouldn't like to buy the pound at the moment. I think the UK is in big economic trouble. It's not
Yeah.
worth it.
That's what I was mentioning earlier as well too. Like you're getting a strong rally here when it comes to the pound, but then I think that ultimately the upside is limited, especially as you get more higher into the price action. It could definitely get faded quickly for sure.
Well, let me just put on your chart. Okay.
Yes, when it comes to the pound, you know, as you get to the upper limits here, especially at 0.37 and above, like 0.318, yes, you are getting a strong reaction here. But again, I would kind of be very careful as far as a full-on approach here, because you know you have a weakening growth in the UK, and then you add this elevated inflation prospect and the fact that they could add that on top of their economy. That would not be looking good for the growth outlook for them. So yeah, I agree with you, Marco. There is stay away for them pound. And yeah, I kind of do the same thing as well. I go to the top status page and I look at, you know, first of all, like, you know, where we're leaning towards. I like to see the Aussie basket as a whole doing very well there on the bullish camp. Metals, I agree with you. Platinum, copper, stay away from those. It's iffy. The opportunity cost of holding, or the cost of holding those assets are more expensive, especially when you have yields elevated, stuff like that. I think that definitely hinders the edge in the metals play. And then obviously the equities are doing well right now, and you're getting a bullish reading across all of those.
Absolutely. Yeah, that's pretty much. And also matching the EdgeFinder with the charts is like the last thing. So 3 things I'm looking at essentially. So EdgeFinder needs to be a good bias, needs to be risk on, and the chart needs to be looking well, which the Nikkei definitely is. Aussie-NZD is, but for example, Bitcoin, not so much. So Bitcoin, if I put back my charts, we go to Bitcoin. Here it is. Bitcoin is still in the range, still looks super flat. And unless we can cross this resistance level, break out of that, and actually print consecutive blue candles on the daily, it's not good enough. So it fits 2 out of the 3 criteria, not good enough to take a position. So that's the way I'm filtering.
Okay. Yeah, I agree with you for sure there. But yeah, Marco, I'll go ahead and leave you there to your portion of the segment, and then you go ahead and proceed with the DNA Funded Challenge giveaway.
Sure.
I do have to run here and continue the other work here, but again, fantastic. We'll see you tomorrow.
Sure. And where are you currently?
I'm in Wisconsin.
Wisconsin. Okay, cool.
Wisconsin, and then we go to Chicago for tomorrow.
Nice. Well, enjoy your trip, and we see each other tomorrow, or are you traveling tomorrow?
No, I'll be available tomorrow.
Awesome. So we will see each other tomorrow. Yeah. See you. Goodbye.
All right, man. Take it easy. Bye-bye.
I will post the link to the form one more time. So in the comment section, you will find the JOT form if you want to participate in the DNA funded giveaway. It's a 10K one-phase account. Okay. Update on my account, which is right here. So I'm in profit, $141. It's a 2-phase fund account. So I've passed the phase 1, passed phase 2, now in the funded stage. Game plan, because of the consistency rule, I'm gonna have to aim for around $1,000 or $1,500 in profit before I initiate the first payout. So only conditions that haven't been met is actually this one is met, so I still have positions open, right? And then I can request the payout, but because of the consistency rule, I need to get some more winners. So if you want to get funded, we have a discount code for you. It is 25% off. The code is A1 Live, and the discount is valid for any DNA funded challenge. So I've had a great experience so far. There's a big broker behind this company, and they're using TradeLocker, which in my opinion is the best execution software. It has a built-in risk calculator, so you don't have to waste your time on websites such as this one for every single account. You just have it built in. I don't know why MetaTrader doesn't have this built in. Like it would be so easy to code why not do it? But they still don't have it. C-Trader, they don't have it. Trade Locker, they do. So that's good. And once you hit the take profit or you hit the profit target, it automatically closes all of your trades, so you don't have to hunt for the take profit. Okay. So let's take a look. You guys want to see gold? Sure, let's take a look at gold. So as far as gold goes, we're staying above that 20 MA. I would like to buy, so I would like to get in, but I'm waiting for a confirmation from the EdgeFinder. I also mentioned that as far as the metals market goes, it's not doing much. So gold mostly staying flat here. Silver staying flat, copper staying flat as well. Platinum flat. If I pick the best one out of them, it's going to be gold. But I would like, of course, a confirmation. I would like a confirmation on the EdgeFinder. So I would like this bias to print bullish. That's the game plan here. Is it my favorite thing in the world? No. It just, I think the bottom is in. Yes, there is a huge wick. The 200 EMA got rejected. But do I want to get in without the EdgeFinder? Of course I don't. I'm just not seeing a lot of buying. Yes, gold has been acting as a risk-on asset, but risk-on assets have recently had an explosion higher while gold is staying flat. So we may have come into a period where gold is a bit flat, slow, quiet. We have had these periods in the past. Usually, such an uptrend is an anomaly, and usually you get this. So check this out. From August 2020 to March 2024, we pretty much had a flat range. Yes, there were a couple of uptrends inside of that, but the uptrends were not that big. So will this market condition come again? Maybe. No one knows. Maybe we have had too much buying, and now it's time to be flat. That's why diversifying is your best approach. So looking at currencies, looking at oil, looking at stocks, looking at metals, looking at crypto, something is always moving. You can always find something that is moving up or down. If you're a trend trader, that is exactly what you need. Going through my personal watch list for today. So let's do that, and then we're going to do the giveaway. As far as the watch list goes, I mentioned I like the Nikkei. I'm looking for pullbacks to the 20 MA. So we have the 20 MA, looking for pullbacks. EdgeFinder is already bullish, which is, of course, exactly what I need. Bullish right there. So that's the game plan. On the Nikkei, Aussie-NZD, same, looking for buy setups. At the moment, my favorite currency pair. There's a really nice uptrend. If you go to the weekly and you zoom out a bit, there's no resistance that is in the way. So it's not super safe to buy, but at least there's no major resistance. I have missed my entry, to be honest. The entry should have been around the 20 MA on, as I mentioned, the 14th or the 15th of April. Now we had the move up, so not such a good price anymore, but we can always pull back. And UJ, I have on the watch list. I have an alert at 160. Plan is to just sell at 160. So, which I have done in the past, then took profits on the sell-off. I'm planning to do the same thing again. So the Japanese finance minister, we will take bold action on FX as needed. If it hits 160, you don't even need an intervention for a drop. You just need traders to get scared. So you get something like this. Climb up, you sell, and then a drop. So you don't even need an intervention for this to happen. Okay, time for the giveaway. Let me copy all of the names. So today is the 16th of April. Let's take a look. 16th. Okay, let's see where this thing starts. Copy the names. Go to the wheel. Paste, spin. Let's see. So, Numpy, congrats on being the winner. If this is your name, after my segment ends, I will send you the code, and you just go to the DNA funded website. It's a 10K one-phase account. Under discount code, you will put in the code that I will send you. So congrats again. And let's check out the comments. So I saw something. Max says, CTrader has a built-in risk calculator. I didn't see that. Really? I mean, I've been using CTrader for a while now, and I've been through it on the mobile app, at least. The mobile app doesn't have the risk calculator built in. Maybe the PC app has it. So I'm talking about this sort of a calculator. The PC app may have it, but the mobile app definitely doesn't have it. At least I didn't find it. So maybe I'm searching the wrong table. Also, Max says, yes, Marco, but you need to book some profits daily for that to work. I should. So the game plan is I have 3 positions running. The game plan is probably to close one of the positions at the end of today or before today ends, just to have, just for the consistency rule, to have consistent bullish days and to not make like $1,000 in just one day. So that's the game plan for this. Why aren't you confident with GBP strength? Well, for my long-term analysis, if I'm looking at GBP, here is what I do. So I first look at the GDP growth. Let's go to the GBP. It's pretty low, 0.1%. That's not great. Compare that to the US, super positive. So that's your first issue. Then you have inflation. Let's take a look. GBP. Inflation is 3%. Elevated inflation. Not a lot of room to cut rates. Then you also have the unemployment rate for the GBP. And I think this is the worst. Yeah, unemployment 5.2% and climbing. So the trend is to the upside. It was 4.2% in Jan 2024. Now it's 5.2, slowly creeping higher. Elevated inflation. GDP not doing that well. Not a great story in my opinion. Long term, personally, I would not hold a buy setup on the pound. I think there's better things out there. Things like Aussie-NZD. So Aussie-NZD definitely works much better, and Aussie as a currency in general. So Australian dollar, I think if you do the same sort of analysis, we can do it here. If you look at the GDP and we go to AUD, pretty good and climbing. Then we look at the inflation, which I believe is under control in Australia. At least it was before the conflict. It's not. Okay. 3.7% climbing. But I think the unemployment is doing okay. So AUD. Yeah, unemployment is fine. Under control. I think it's similar to the US. Definitely not in an uptrend. Yeah. And before the war started, the Australian Central Bank, they were super hawkish. So they were planning to hike interest rates. I think they were, at the time, the only central bank looking to hike rates, which also tells you something that is bullish for the currency. I haven't checked out the central bank rate forecasts in a while. Let's see, RBA. To the upside, absolutely. So looking to hike. What about the Fed? Fed, still a cut. Interesting. Yeah, by the end of 2026, there is nothing. I think we hold the rate, and then maybe 2027, we start to cut. We're going to see. Central bankers are mostly looking at the situation in the Middle East at the moment and seeing how that thing develops. Yeah, so Max says on mobile, there probably is not a risk calculator. Marco, watch Swiss yen. Sure, let's take a look at Swiss yen. CHFJPY. Swiss yen had a position, got taken out. This was a loss. It is now right at the ceiling. That was my main bet when I took the short. That this is the ceiling, that either the Bank of Japan will defend this level or that the SMB, Swiss Central Bank, will defend it. I got taken out of my position. I'm not looking to re-enter, to be honest. Main reason being, UJ has some room to go up still. We can go to 161, 162. It can happen. And Euro Swiss is far above the intervention level. The intervention level on Euro Swiss is 0.9. That is when, or close to when, the SMB started getting vocal about the Swiss franc being too strong. So if Euro Swiss goes back to that level, then yes, we could expect an intervention. But if it stays hovering far above it, then an intervention is not so likely. Okay, and I still have 1 more minute. So what can we do for the 1 more minute? I went through the watch list, went through gold. Oil. Yeah, let's do oil. Oil, I'm pretty flat at the moment on oil. Again, the negotiations fell through on the weekend. Strait of Hormuz is still closed. Oil should have been going higher. It's not going higher. So you're getting good news as far as oil goes, bad price. That's something I don't want to be involved in. Being patient on oil at the moment. I don't think we're going to clear this support level, so I don't think we go down, but I think we could remain flat here. Oil prices can just stay elevated for longer. So that's about it from me. Don't go anywhere because James is coming on in a couple of seconds. Don't forget the code A1Live gets you 25% off on DNA Funded. You can catch me tomorrow. I'll be doing another giveaway. So good luck in the markets, and I will see you tomorrow. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hello. Excuse me. Happy Thursday, everyone. I can't get my words out. Hope everyone's well. Hope everyone's having a profitable week so far. So I'm still in the Aussie-New Zealand. Nothing's really changed. We've had the move to the upside we were looking for. Yesterday, I think we were actually pretty much flat. When I say flat, I mean in terms of price movement, we weren't really seeing much. However, since then, really nice move to the upside on Aussie-New Zealand. The fundamentals are still very supportive. As you can see here, Aussie-New Zealand still the most bullish reading on the EdgeFinder with a score of positive 11. So yeah, on this side, perfectly fine. So all we're doing is kicking back, relaxing, and getting some swaps paid into our bank account. Well, not bank accounts, into our trading accounts. I'm still cautious with this market, which is why I'm being a little bit aggressive with the trailing stops. I've not trailed any further. Our initial position is at break even. My scaling position is at 1% risk. So I've recycled the risk from the first position into the second position, and that's as simple as it is. But I am, again, as I said, very cautious about the overall behavior of this market. It's getting very stretched. It's just, it's looking messy, looking a bit, yeah, not great. But I will continue to ride the trend until I've got a signal that that's no longer possible, whether it be a change of trend or whether it be the EdgeFinder flipping to a neutral or even a bearish reading on Aussie New Zealand. I have begun a short campaign on euro dollar, very, very small size. So I think I'm down about $3 on this position, really tiny. But yeah, the idea really is just looking for a bit of a mean reversion of this this left side move. Nothing really interesting, not necessarily a macro trade, more of just a bit of a mean reversion correction type of trade. There's not really anything to inform you of here. Pound CAD, I did execute this morning, and it's been extremely unsuccessful. I don't think this trade could have gone really any worse, to be honest with you. So we entered right here on this wick, and it's just completely collapsed to the downside. Typical. It is what it is. It's all good. So pound CAD was taken because, oops, that's not what I wanted. Excuse me. Got the bullish reading on the EdgeFinder. The H4 looked pretty good where it was at the time. So obviously now it's flipped very bearish. But at the time when we entered, we were seeing a little bit of rejection in our fib zone. It lined up with some slight structure over here. We had a bullish trend. We had the RSI was a little bit oversold as well. So I was like, you know what? Let's take a stab. It looks good. The fundamentals are there. The technicals are there. Why not? Now, on the other hand, we also are now coming back into a more structural fib zone, whatever you want to call it, a more relevant level, if you will. So this was sort of not really the swing low. The swing low I would consider right here, or maybe even over here. It depends exactly how you draw it. So there is actually an opportunity to look for a re-entry if we can see a rejection out of this previous support here. But we'll see. Obviously, I'm not going to take a stop loss and then jump right back in straight after. That would be a bit ridiculous. So I'll wait probably for tomorrow, see what we can get over the next couple of hours, and we'll take it from there. We are long on the Nikkei. This one is actually more of an intraday trade, day trade. It's not a swing position. It wasn't my trade. It's one of my people on my team. But the Nikkei is also getting a really nice bullish reading right here, score of 5. So not the strongest, but it is there. The trend is there. It's all looking completely fine. We also had quite a bearish opening on New York. So there's a little bit of room for correction. The entry is actually slightly lower. I think this is actually in profit now. So the entry was around here. And then I decided to pick up a few stocks. When I say a few stocks, it was just Microsoft and Tesla. I'm not a stock guy, so please do not make any investment decisions based on this or anything I say, regardless. But yeah, I decided to buy a bit of Microsoft and buy a little bit of Tesla as well. Basically just looking to buy the dips. These are long-term holds. So when I'm saying I'm buying them, it's a case of I'm looking to hold them for the next 6 months to a year, 2 years, however long really. These aren't swing trades. They're not intraday trades. They're long-term positioning. But yeah, that's all I've got going on right now. So now I guess I can read the chat and see how everyone's doing. Quatera FX, hello to you as well. I saw you in my stream earlier. Good to see you back. Sluggy, hello. Max, good to see you. Hope everyone's doing well. So I don't really have anything going on. I was considering actually buying some MicroStrategy. I don't think they're called MicroStrategy anymore. I think they just go by strategy. I might got that wrong. But basically, I can't trade Bitcoin with the broker I'm with at the moment. So I was thinking maybe I could just go by proxy, buy some MSTR, which is the ticker. But I don't know. I was looking into it. I looked into it a few months ago, and it's just the financials are looking a little bit rough. Again, I'm not a stock guy, so again, don't take that too literally. Just from what I understand and what I've seen about the company, it's looking a little bit rough. So I decided to stay away, at least for now. But I do still quite like the Bitcoin long idea from this point. So we're starting to see this market get a little bit of a bid off this 200 weekly moving average. We're still, however, in this consolidation. So the only criteria, if I was to be a buyer, again, I can't actually be a buyer, unfortunately, but if I was, I would need to see a break above the weekly high right here. And then I would need to see a real push. And the EdgeFinder, if that flipped to bullish, that would be fantastic as well. Moving on, Pound Swiss has been getting a bullish read. I'm not even sure if it still is. Pound Swiss I need to get rid of because it's just such a horrible market. The FTSE, I don't really have anything going on here. We're still stuck sideways. So I was looking to be a buyer of the FTSE. The problem I've got really is I just don't like it. So if we could see a pullback towards this fib zone, it would fill the, in fact, actually, having said that, we've actually already filled the gap. So maybe this trade idea is completely invalid now. Either way, we've been following the trend. I'm fairly sure the EdgeFinder is bullish. Let me just double check. EdgeFinder is bullish with a score of 6. So it makes sense, but the entry is just very, very, what's the right word? It's just looking a bit rough. You know, I'm not really a fan of that one. So moving on was Euro Aussie. This is kind of one of the only other markets I was looking at, but again, it's not really looking great. So on the daily, we've rejected our 50 moving average. So we were talking about the pound Aussie and the Euro Aussie. That was kind of my main thing for the past, let's say, 1 to 2 months. That was kind of the markets I was sort of really paying attention to. When we got to sort of this point down here, I was starting to get very concerned because the markets were extended. The fundamentals were obviously there, but they were starting to get pretty much fully priced in. And we were obviously seeing tensions with Iran and US starting to pick up as well. So it's a case of, okay, I don't want to be a seller at this point because it's just too far. You know, we kind of missed the move at that point. We managed to get pound Aussie, but anyway, that was a while ago now. So the move we had here was a very nice opportunity to have this sort of little bit of a correction, a little bit of a mean reversion to sort of rebalance a bit. And now we're seeing these fundamentals kick in again and continue. So we obviously saw this upside on the back of oil prices rallying and central banks, obviously the ECB in this case, turning a little bit more on pause / slightly hawkish. So now that's kind of, that narrative's a little bit more over. And we've got the H4 that's flipped bearish. I'll be looking for a short position within this fib zone. So if we can get that, I'll take the stab. If we don't get this, fine, I'll move on. I've got no problem skipping over the Australian dollar right now because obviously I'm already in Aussie New Zealand longs. I've been taking the Aussie positions for quite some time now. It's kind of been the main theme. I'm ready to allocate elsewhere. So let's see what we've got on the EdgeFinder today. Alice, hello. Hope you're well. The strategy ain't micro anymore. 67K they bought Bitcoin. Yeah, the thing is, oops, I don't know what's going on here. The thing is, all I ever see on Twitter or X about strategy or MicroStrategy is the average price is here. If Bitcoin goes there, they're going to get liquidated. As far as I'm aware, that's completely fabricated. That isn't true. But it's still, I don't know the complexity. Again, I'm not a stocks guy. I haven't done deep research, but it just seems to me that it's not necessarily a company that is printing money. It's not something that I really am interested in. It's just not something that I bothered about being involved with. At least, yeah, that might change. Actually, to be fair, I might have to get the stock box. I don't know if my code works with the stock box, but if it does, make sure you use code ELITE for the EdgeFinder as well. Anyway, moving on. New Zealand, US dollar, getting a bearish reading. So let's take a look because we were talking yesterday on my segment about the US dollar. And basically my idea or my narrative yesterday behind the US dollar was that I'm just not really bothered. I don't really care what happens to it from here because I'm not involved with it. I don't care. And at this time, the EdgeFinder was flat. However, now the New Zealand US dollar is getting a bearish reading. I'm a little bit more interested. The problem is on the H4 here, we've come out of this bearish trend and we've now flipped bullish. So just technically speaking, for the way I define the trends, we're now in a bullish H4 trend. However, or as well as that, I should say, the daily is also looking a little bit rocky. So we're not seeing a defined trend. So again, just relating to these moving averages, it's sort of just not doing much. There's no directional move here. So I think I'd be happy to take this trade, but I would just need it to meet quite a few criteria. So let's just take a look here. This is just rough technical analysis, of course. So because we flipped bullish and we've now broken above this level of resistance, I would need to see it break below, hold below, retest potentially, and then continue lower. Moving averages also then cross bearish. Other than that, I can't be involved because there is no what's it called? No signals for my technical entry. So obviously I draw fibs, I look for pullbacks, I need the trends. I don't have any of that here. So yeah, it's unfortunately completely invalid for me right now, but that might change as well. Right, hello everyone. What's your take on New Zealand US dollar sells? There you go. Oh, my code does work with the stock box. Okay, I might have to pick up the stock box after the stream then. Tax write-off. What do you think about pound Aussie? Okay, we can move on to pound Aussie in a minute. So yeah, New Zealand US dollar. I like it, but it just needs a little bit more development for my taste. Actually, let's just zoom out a little bit. Let's just take a top-down view. So monthly's bearish, weekly's bearish, daily is daily's actually technically bearish. Got 200 above the 50. Doesn't mean much because it's side by side, but it's something to note down. Let's just see. Interesting. Actually, you know what? After all of that saying I don't like it, maybe I'm changing my mind. Pulled into 61.8. Quite a nice daily rejection here, but again, I see it, but again, I'm going to have to sit on the side because what you will end up finding as you sit at the charts more often is you end up doing this where you scroll through timeframes. You might find one time frame that looks good and aligns with what you're thinking, but then you've isolated that one time frame and ignoring everything else. So of course, as I said, the H4 is normally where I'll execute, so it's not there, so I can't do it. So pound Aussie, I think it should be the same as Euro Aussie in terms of sort of generally speaking. The fundamentals are pretty similar. The trend is almost identical. We pulled back to 50 daily moving average. We're now having a continuation to the downside. So when it comes to when it comes to a lot of these markets, so the pound, the euro, I think they've largely lost their steam because obviously we had oil rising, we had yields up, we had inflation expectations going up. Now that, in fact, actually, let me just pull up oil really quickly before I continue with that. I just need to see what it's doing. Yeah, so a little bit of a bounce off our daily 50, but overall oil is cooling off. But during this rally, this was obviously causing inflation expectations to go up. People have to spend more on energy. Now it's coming down. Central banks can start not necessarily using this as the main focus. It doesn't mean that, okay, it means that oil is coming down. Okay, let's start focusing back onto growth, labor, inflation. That's not obviously completely done yet. We've still got the situation over there, but as we shift or as that starts to de-escalate, we can start seeing sort of continuations of the pre-war fundamentals. Does that make sense? I'm not sure I worded that necessarily correctly, but hopefully you got what I was trying to say there. Sometimes my brain moves faster than my mouth can speak. So here we are, pound Aussie. So on a technical side, how would we look to trade this? So we've got the bearish trends, daily H4, fine. Fib from low to high, it looks, yeah, pretty much the same as Euro Aussie. So little bit of structure within our fib, previous lows over here, nothing too major. But if we could see this sort of 50% retracement, retest these lows, it'd be a really nice break, retest sort of pattern, and then a continuation lower. We've also got the RSI here on the H4. It's a little bit oversold, indicating we could get this minor pullback to obviously continue lower. So pound Aussie, I think it's worth keeping an eye on, but, and the big but, especially for the way I trade, it's not on the EdgeFinder. So yeah, it's a no-go for me. Generally, when I'm trading, other than long-term positions like Tesla and Microsoft, oops, they shouldn't be there. Other than Tesla and Microsoft, things like that, they have to be on the EdgeFinder for me to be involved. So what else do we have? Euro pound shorts. You know what's interesting? I was looking at some institutional reports last week. It was quite surprising how many banks were long on euro pound. Anyway, that doesn't lead into anything, but they might be on the wrong side. Let's see. I'm fairly sure euro pound was bearish yesterday. Let me put neutral back on so we can see. So yeah, it's a -2. So again, fundamentally, nothing for me here. Daily technically is bullish. H4 technically is bullish. Really nice dynamic support here with our 200 moving average. Yeah, I can't see anything here for shorts, to be honest with you, Sluggy, unfortunately. If you were looking to be a buyer, Again, I wouldn't actually want to be a buyer because, again, EdgeFinder, but let's see, what do we have? There isn't really anything either way. The only real difference is just the trend. Technically speaking, on a technical basis, fibs, etc., pullbacks, there's nothing. Because we are creating, we've got high, lower high, lower high, lower high, lower lows. Yeah, no. There is nothing for me here, unfortunately, Sluggy. My apologies. EdgeFinder CEO himself, Alice, I think you might have got the wrong person, my friend. That is not the person that I know. That's weird. I think my mic just muted. Let me just fix that real quick. And I also think I've gone over my time slot. I'm not sure. Okay, right. Hold on. I'm not sure what time I'm on until. Sorry, guys. I know it's a bit unprofessional. Let me just double check. 10:45. Okay, I've got 10 minutes left, and then we've got Tiger coming on. AUD-NZD, Jeremy, that is my favorite market right now. So this is my positions on the Aussie-New Zealand. I would quite like to add in again. So what I'm looking for now is another sort of 50% pullback. Now, this is very, very aggressive, but I will take it because I'm in quite nice profit already. I have a little bit of room to reallocate. So if this does happen, in terms of it pulls back into the fib, retest some of this previous structure over to the left, and we see a rejection, I'll trail the first stop and the second stop to break even here. Excuse me, to break even here. And then, yes, I'll probably add in 0.25 to 0.5% risk. And that way, if we do end up getting stopped out of the scaling and these two positions, then I'll still make a profit. So that's my thinking. Now, the reason I would be so aggressive trailing stops in that case is just, again, as I said earlier, it's the higher timeframes. I really, really feel uncomfortable with how aggressive and sort of fast this move has happened. So bear in mind, this is a 14-year range. Continuously failed to break higher, failed to break higher here, failed here. And now we've broken above relentlessly. I think we are in for some sort of mean reversion at some point. Now, the fundamentals don't warrant that yet, but at some point they will. I guarantee at some point this market will have, not necessarily a crash, that's not the right word, but it will have a deep correction. It's really just a case of when that happens. Oh, hey, Nick's here. Sorry, I wasn't watching. How are you doing?
Hey, no worries. I just wanted to respond to this person because they have definitely been scammed by a fake profile of mine, and I just want to do this. I do it often, but just another PSA. I do not offer any sort of account management stuff. I'm not licensed to do that sort of thing. I don't advertise that. And I certainly wouldn't risk my legitimate business scamming people on the sides and get sent to jail for that sort of thing. I also don't own the website that this person is claiming that I do. Please feel free to verify that on yourself. You can find out who the domain host owner is. It's not me. That's a scam site, 100%. It's a very common scam. The Bitcoin, give me your Bitcoin and I'll manage your money for you and create massive wealth for you. It's a total scam. So I just wanted to reiterate that. Most people understand that, but this person is really struggling with this idea that this is absolutely not me that they're speaking with. They have been scammed by a fake profile, and they are unfortunately all over the internet. James, how often do you have people faking your profile and trying to scam unsuspecting people?
Oh, it happened yesterday. Actually, I had to blacklist someone from my company because it was exactly the same thing. Messaging our community, we'll manage your money. I need help with school fees, whatever it may be. It happens on almost 2 to 3 times a week, and I'm much smaller than you are in terms of audience, so I can imagine it's 10 times worse for you.
And imagine this person is very insistent that on the side, I'm running a double life where I'm secretly scamming people and doing this. But doesn't that not sound like the dumbest logic ever? If you think about this for a second, why would you, in your case, right, run a fully legitimate business and put everything at risk by simultaneously scamming people on the sides? It doesn't make any sense. There would be no point in doing such a thing. So I just want to, I know most people fully understand this. The Bitcoin scam thing is unfortunately very hard to accept. If you have been scammed, if you are in denial about having been scammed, it stinks. Impersonators are awful. But yeah, we don't do any sort of account management. And the only website, as always, if you want to verify anything in regards to scammers. This is something we've dealt with for years, unfortunately. People faking our profiles and pictures, etc. But please feel free to head over to a1trading.com/scammers and avoid speaking to fake profiles. Sorry to jump in on that, James. I just wanted to make that PSA because it's an ongoing problem. I know you deal with it, and everybody who has any sort of following deals with scammers using our pictures and name.
Yes, absolutely. Well, that's the thing. I mean, even in the US is absolutely brutal when it comes to financial law and regulations. It wouldn't be worth it. You would be sued into the ground. It's not worth some Bitcoin.
Why would I risk going to jail and also put all this work into a legitimate business just to have it all send me to jail if I was scamming people on the side like that? Definitely, please be careful. Again, some people, when they have been scammed, unfortunately, the denial of having been scammed is like really hard for people to accept. So they'd rather continue to believe the lie rather than face the reality that they got tricked. So again, please be careful when you're speaking to online people. James is a busy dude. I'm a busy dude. We do not spend time DMing people very often. And if we do, it's, very brief, and we would never ask you to send us money directly. At least not on, without going to our legitimate website, a1trading.com. So please be careful out there. James, sorry to jump in. You've got the show from here. I just wanted to do a little PSA.
Yeah, no problem at all. Stay safe. Right, see you later. Okay, let's get back on topic. How is Ball Out? Good to see you, my friend. Hope you're well. Joshua, hello. Nick sending you Instagram friendship. Yeah, I'm sure he is. Anyway, let's go back to what we were talking about on the Aussie New Zealand. So yes, to scale into this position, pull back into fib zone, retest previous structure. If we see this rejection over here, if we see a rejection off this zone, I'll trail both stops on these two positions to break even on the second position, and then take extremely reduced risk on the third scale in, and that just mitigates my risk and maximizes the upside. So clearly a scam. In terms of targets, I don't think I spoke about my target. I don't have a set take profit, and what I mean by that is I don't have typed in numbers where the trade will close. I don't have that type of hard take profit. But what I want to see, if this level is reached, then I'll close the trade. Hold on, let me try and find it over here. It's really over to the left side. Over here, that's where I want. Sorry, I'm getting a bit lost on all these candles. So yeah, I'm looking for the high over here to get hit, which was from 2013. And the reason I'm looking for that level is because we don't really have any traffic other than that over here. So obviously we're starting to see this left side get corrected, or whatever you want to call it. The only real stopping point is either this low, which we are pretty much at right now, or this high. And that's kind of it, in my opinion. So I want to be an optimist. Again, got the fundamentals there. The trend is extremely aggressive. So I'm happy to take a bit of a more optimistic view and look for the high over here, which is around 1.25191. There you go. Speed run through that one. We do have Tiger coming up in a couple of minutes, so I won't take too much time. Do I take mean reversion plays? I do. I'm in one right now, actually, on euro dollar. So I'll show that over here. So yeah, there is nothing really to discuss. This is purely mean reversion, not really on the technicals, and not massive. Not on the fundamentals and not massively on the technicals. What I'm quite liking about this is we've got the sort of lower highs getting formed on this monthly time frame. The weekly looks okay, sort of similar type of idea. So that's pretty much it. We've also seen a very aggressive run on euro dollar recently. So I'm looking to see if we can get sort of back to around this zone or this low over here. Even further would be fantastic, but I'm not going to be sat in this for weeks and weeks. This is more just to see, can we get this downside? If not, cool, I'll take maybe a $20 loss. But yeah, we'll see. So when it comes to mean reversion trading, it's very, very dangerous because, well, the way I do it can be very dangerous because I take a DCA approach or a ladder approach, whatever you want to call it. So basically what that means is if I'm looking, let's say I'm looking for this to be my target. Let's say I want to sell here. Okay, the market moves against me. Let's say I go I don't know, let's say 0.02 lots, for example, whereas maybe my standard lot might be 1 or 2. So it's very small in comparison to my normal sizing. So in drawdown, it's really negligible. So I can add in again. And eventually what I'll end up with is multiple small positions that add up to one larger position at an average price. So that's how I do it, if that makes sense. But yeah, I would highly suggest to stay away from that unless you, first of all, have decent bankroll, but also you know how to manage risk, manage your average price, know when to close positions, and so on and so on. So I think that's pretty much it. New Zealand US dollar we looked at. What else do we have over here? Aussie, New Zealand, platinum, Bitcoin. You know what? I've just realized Bitcoin is getting a bullish reading. So I was sat here earlier saying if Bitcoin flipped bullish, maybe I'd be interested. It has flipped, but I didn't notice this earlier. I'm not sure how long Bitcoin has been bullish for, but that changes things quite nicely. Again, unfortunately, I can't trade Bitcoin directly. I can't trade BTC USD or Bitcoin itself, but I can trade proxies. So I can trade, MSTR or whatever maybe. So it's a little bit different. It's not the same as trading Bitcoin, but I'll figure that out on my own time. So the daily is very bearish. I don't really like the daily, and we are still, as I said earlier, stuck in this weekly range. So right now we are setting up something. I don't think it's there just yet. So for the way I trade, I'd need to see Bitcoin break and hold above this consolidation. So break above, retest, and then some sort of rejection here, whether it be a daily bullish candle close, 4 hour, whatever it is you look for. I think that would be great. So again, we've got this 200 weekly moving average, absolutely fantastic, really nice sort of dynamic support through here. So yeah, it's looking really nice. And actually, if we just change this level and drag it over to here, again, really nice level of support through here at this previous high. So definitely something to consider if you do have access to Bitcoin. Again, not financial advice, but I do quite like that. What else is the platinum? I don't really trade platinum, but maybe we could pay attention to that if anyone does want to look at platinum. James, in Swiss yen, let's see if it wants to drop. I've not really paid any attention to Swiss yen. It's not a market that I pay any attention to on a regular basis, actually. Actually, I forgot to update you guys. I was in dollar Swiss. I think I've completely gotten rid of it. Let's just see. Is it still there? It's not. This is just a side note, by the way, but I was in dollar Swiss. We went long. I think it was around here, got stopped out in this move, so that was a bit annoying. But yeah, anyway, let's go back to Swiss yen. Did you say you were short? Yeah, so you want Swiss yen to drop. I think short term, fine. I mean, we've got, what's this, a quadruple top. So yeah, I mean, naturally, I think just the way the markets behave, yeah, a drop here makes a bit of sense back towards this 50 or the 200 moving average. However, the yen is still a funding currency. I mean, the SNB interest rates are at 0. So, I mean, maybe that's not entirely applicable to Swiss yen, but it is clearly still catching this yen weakness ride. So even if it does drop here, to be honest, I would use that maybe more as an opportunity to buy dips rather than be a seller. I mean, you could play it both ways, but again, just my opinion. But yeah, Swiss yen isn't really my friend. I made a very bold claim. I think it was the start of last year, so probably about a year ago, that I really was so confident. It was back here, I remember. I was so confident Swiss yen was going to drop, but it just didn't. It completely blew through my whole idea. I didn't lose that much money. It wasn't really a monetary thing. It was more just wow, I was so confident. I was just so wrong. It's one of those things, part of being a trader, but there you go. BTC is already leveraged. Yes, yeah, that is exactly right, Sluggy. Yeah, MSTR it's a very aggressive way to basically trade Bitcoin on a proxy. Which pairs are better to trade at the moment? There isn't a best pair. That just doesn't really exist in trading. So, excuse me. The way I think I get what you're saying, but in reality, you wouldn't look at really just the best pair because you've got lots of different options depending on different themes and different expressions, different strategies. I would really be focusing on the Aussie New Zealand. Again, I'm a little bit cautious, but I do still think it's got upside, so I really like it. I think actually some of the stock markets, now maybe not to trade right now, but I think things like the S&P, Nasdaq, they do have some really nice potential. So let's actually go back to the Nasdaq. So we were looking at this earlier, and it's had just an incredible move. Look at these weekly candles. Absolutely incredible. In fact, Nasdaq's just created a new all-time high. Yeah, absolutely phenomenal. So what we could maybe look for here is, I mean, it's a little bit dodgy. Oh, I've just completely run out. Sorry, Tiger. I know you're in the back. I just lost track of time there. Guys, I'm going to have to save this one for tomorrow because I've just left Tiger to hang for a couple of minutes. My bad. Guys, don't go anywhere. You have, I think, Tiger Berry coming over to take over the show. Have a good one. Stay safe. Don't get margin called. And I'll see you all tomorrow.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Thursday. Took me a second to remember. Yeah, that's why I set an alarm on my phone so that it yells at me to get my butt off the stream. No worries on that, James. Oh, good grief. I'm on the wrong screen. Oh, yeah. It's kind of funny, guys. I was asked to do a plus 500 tutorial video yesterday. And I'll be honest with you guys, I knew nothing about the prediction markets. I mean, I've been on poly markets and kind of, looked at some things on there, but I was tasked with creating something I knew nothing about. So I did a little research. I had Grok, my old buddy Grok, help me out. And then I made a tutorial, and they had asked me to create an account. So the one bet I did yesterday, I did 2 bets. I did one on Bitcoin, but the one that's ended was what the temperature in New York City was going to be. So I bet a whole $1 on it, and I won a whole 7 cents. So there you go. 1 for 1 in the prediction markets. So there's that. So maybe I like it. If this whole trading bit doesn't happen, there's always prediction markets. Just kidding. I ain't going anywhere, guys. I'm FX for life. So let me know, guys, what you're looking at. If you have any questions on anything, of course, you guys know I'll go through some supply and demand zones. I'm playing around with Bitcoin. I did take a small position, guys, since we are getting a little bit of a bullish signal over here, +7. So I am, let's see here. Well, first from the top, obviously we had that headline that Marco was talking about earlier on in the show. Where was it? Right here. Okay. Where they're talking about having the banks take care of the tolls. So yeah, when we got that headline, it was just a very minor pullback. I mean, I just kind of took a look at some of these top line assets. The VIX flew up just a little bit. So did the Dixie. Oh, let's get that out of the way. Go down to a 1-minute chart. So yeah, we kind of got a little bit of a risk off type move in the market. So I don't know how long that'll be sustained. It's just a headline at the end of the day. I don't know. I don't think President Trump's going to have it, but we'll see. But nevertheless, it was obviously a little negative for Bitcoin. Here you go. There's your big down move. But it had dropped into that questionable 2-hour demand zone that I was telling you guys about, I think, 2 days ago, since I was off onboarding yesterday. Guys, I'm learning a lot, taking a cap cut course starting today. Woo, it's going to be some good stuff. So I'll make some better content. But anyway, yeah, I dropped right into this 2-hour demand zone. So I just took a little bit of a bounce buy off of this thing. Where am I at? 1 hour, 1 minute. So yeah, I had basically got in where this white line is after we pierced into the zone. It's just a little bit of a reaction move. I don't know. I don't think it's anything that's going to continue to push risk off movements, or at least that's what I'm banking on. So when we got that initial bounce and push up, I basically waited for a little bit of a liquidity sweep underneath these. So this wasn't a demand zone buy. Well, it was off the 2-hour, but as far as kind of the confirmation, if you will, I basically took this consolidation here. And then when we got that push up, well, again, okay, for that one moment in time, okay, the demand won. The demand exceeded supply. Now, not a whole lot. But my banking on this is it moved it just enough to kind of put, where I could take advantage of these sell orders down here, since these buyers pushed price up, to use for fuel for buy orders. Okay. So I just basically looked at a liquidity sweep of that, and I ended up getting in right here. So far, so good. I've got an overhead supply sitting here on a 30-minute chart. So it's really not even that far away. I just did like a 0.2% risk on this thing, turned $200 into like $300. Okay, so nothing too major, but I wanted to get my feet wet since I haven't been placing a whole lot of trades lately. But I just thought that might be a quick way to scalp a few bucks. So there's that, getting close to it. What do we got over here on the chart or on the chat? Gold. Christian wants to see gold. Yeah, we can look at that. Views on Aussie Kiwi, Jeremy. Yeah, about that. Let's go to Aussie Kiwi first, and then I'll get to your gold. So I had a zone drawn up. Let me see here. Go to my. Okay, so with Aussie Kiwi, of course, it is, as a reminder, guys, giving us a nice, very bullish score of plus 11 over here. So it's looking really nice. On a, let me see, 15-minute chart. Okay, going down into the noisier time frame. So just, this is obviously where it gets a little sketchy, but I did identify this 15-minute zone yesterday, okay, midday, or basically when price was up in this area. So that would have been around 2 p.m. my time. So I was just keeping an eye on this little dinky little zone here. Price dropped into that zone right at the intraday crossover or switch, okay, from basically the end of New York into the, kind of the early period of Asia session. So, I stayed away from it because of that switch over, guys. If you haven't yet done that, if you place trades around this time, again, this is 4 p.m. my time, Central Time, so 5 p.m. New York City, spreads widen, liquidity gets taken out completely, and you do tend to get some of these whipsaw type moves. So when I got my alert yelling at me, I decided to ignore it because I wasn't even trying to, have to basically cover 10, 15 pips of not slippage, but spread, okay, how the spreads widen. So I ended up ignoring it, but it laughed at me and it took off anyway, as you can see. So it went up nicely. In hindsight, it would have been a nice trade, but even had I pulled that trigger, guys, I would have been, I would have been put in the trade higher up in this area somewhere. So, I didn't want to, on an Aussie Kiwi, which doesn't really move, but what is that, about 60 pips, 50 pips a day? 60 pips. So it moves 60 pips a day. I didn't want to automatically basically give it a sixth of an ATR, if that makes sense. So I ignored it, but it turned out to work after all. So where are we at right now? Well, we are, as you can see, bouncing into this overhead supply that I drew up way back here. And I think this might be the one I showed you guys. Not quite sure. But yeah, I was basically keeping an eye on this daily zone from way back on April 13th, which also kind of coincided with a former support. So again, guys, I don't think these things expire. Some people do, but when it comes to supply and demand and support and resistance, when you go to a higher time frame, it's going to be a lot closer. So Now that it's bouncing into that overhead supply, and it did bounce in, last week as well, so a week ago. So we're basically testing it. I'm just not comfortable buying anything for Aussie Kiwi on the higher time frames right now. The only reason I was looking at this, had it not hit during the switchover, was because we had already kind of broken this structure on a minor scale structure break here. And, at that point, it just looked really good on a 15-minute chart. So it was just more of I don't want to say scalp, but just more of a very short-term day trade is what I was looking at. After we, most importantly, broke this minor structure. So this was clearly a short-term play, small time frame play, knowing that we have the rest of this overhead supply to deal with. And it had already been kind of touched. It had already been mitigated again last Wednesday. So it already had its biggest push down, or, biggest rejection as far as I'm concerned. So when we broke this structure, that made me feel okay with taking advantage of the strong EdgeFinder signal, number one, but also this break of structure retracement right on that structure point. So as far as plays right now, I don't really like anything. I mean, it looks like I did draw up a zone all the way down here. What was that, another 2 hour? Yeah, so 2 hour, kind of a skinnier zone. It could come into play. I mean, at the end of the day, we do have some liquidity here. Because these traders ended up pushing price up and breaking structure on their own, right? This one was obviously the best looking one, but in any situation, we've got liquidity kind of chilling and hanging out down here, okay, on both of these. So if that liquidity comes into play, it just so happens it's right here at a pretty decent zone of demand, although there's a lot of candles to the left, but at least it's a little closer to the bottom of it. So this is kind of a unfilled order / liquidity possibility at the 120.40 level. As always, guys, not financial advice, just like Nick says, but it's definitely a spot I'm keeping an eye on. Now, you do see that I had drawn up another zone right here on a 1 hour. So I drew this up before we bounced into this zone. Now that we've bounced into this zone, even though it has been mitigated, I'm not going to sit here and pretend that a 1 hour demand is going to be stronger than a daily supply, even if it is from 13 years ago. So I'm going to now ignore this signal. The move's probably already been made. So I'm going to take and steal that alert, and I'm going to put it down here for this 2 hour zone. Now that's a big pullback, but it's also a big time frame that it's bouncing into. And furthermore, where we're bouncing in, perhaps we could even look on maybe a 1 hour and find a supply. Okay, here we go. So now we've got a supply zone that's created from this rejection. Let's get that drawn out. Get this. Hold on a second. Let me get that drawn out. Where did it go? It vanished on me. Okay. So we've got a new supply zone that's created here. And what is bouncing into it? Price. So there you go. Fresh supply zone. And now you see that we are clearly getting a little rejection. How much of that is from the Iran banking thing? Okay, who knows? But we're clearly getting, between the two, okay, between the headline and the supply zone, you can clearly see we're getting a rejection. And, okay, that word that I told you I don't really use a lot, change of character. Okay, I always refer to this stuff as breaks of structure, but that's typical. That's pretty much a change of character. I mean, it's broken a low. Now, how major is this? How minor is it? It just depends on the time frame. I don't think it's really a major one because it is. I'm looking at this thing on a 15-minute time frame, so I don't put a whole lot of trust into it. But it's also nice to know it bounced into that newly created supply zone over here. So that supply zone could be part of, again, with the headline, why it's changing a character or breaking a structure to the downside. So I would just look at it as, maybe that zone will push price back down to my demand zone, where I would be obviously interested in taking the other side down here. So that is an opportunity. If that were to fail, then it wouldn't be a big surprise because it did, after all, bounce into, the rest of that daily supply and with that 1 hour supply confluence now. So that's a lot of detail, a lot of instruction. At the end of the day, I don't like this. It is pretty high on the curve. It's pretty much in the premium, or let's see here, premium zone, I think. Let's go just take a look. Okay, so it's basically just barely touching the premium zone, but mostly in the middle. And I don't want to diddle in the middle on this thing. I want to wait for a return to a cheaper price. So hopefully that helps. But yeah, you can't argue with the strength of it over here on the EdgeFinder right now. You've got one item against it, and that's CPI. Other than that, a handful of neutrals and quite a few bullish, favoring Aussie over the Kiwis. So there's that. Andrea, Tiger, pound dollar pullback. Yeah, let's take a look at that after I look at gold, because I do want to help Christian out with that. So gold, silver, yeah, obviously still pretty neutral. I do want to see which direction it's leaning, though. So I'm going to go to my neutrals over here just to take a look. I'm sure it's further down the list. Yeah, silver -1, gold straight up 0. So there you go. Well, let's take a look at the technicals real quick. I don't even think I have an alert set for it. So let's go over here. Starting to get so many assets on here, they get jumbled up. Yeah, so gold overall to me has just kind of been in this. Let's go up to a higher time frame. Yeah, see, it's just been kind of consolidating. I mean, you had that big push up, kind of taking a little bit of a break. You guys remember I did mention this 4-hour supply zone that it bounced into once and got rejected, and then it bounced into it again. So I definitely would see this thing, well, at this point, the supply zone's empty. So yeah, I think the next stop is really up to your daily supply, which is a little higher up, because we did bounce off this 4-hour demand at the bottom, and that's what created our impulse leg. You guys see me draw the impulse legs now and then, okay? So this whole, multi-candle leg, if you will, ended up breaking these structures up here. So perhaps some pullbacks on that, okay, might be possible. I mean, at the end of the day, we've got uptrend, and then it's just been getting really lazy. It's not like silver. See, silver has been a lot cleaner. Very easy to see higher lows and higher highs. But then when you look at gold, just this last, couple weeks, it's just been a little more sideways. So, yeah, there's not really a play on it right now because it is straight up neutral. But again, if you're just looking straight up technicals, guys, we could always be looking for some zones. Let's see here. And let's go to a 2-hour. No, 1 hour. Possibly down here. Okay. We could possibly look at this little candle here. This is probably going to be down, close to your 61.8 if you're looking for a filter. Okay. I don't know. Let's take a look at that. That's a little deeper. So it's basically around, okay. So that's around the 71 or the kill zone. But here's the thing. Okay, we have a gap here, but does this exit candle look very strong? Nah. You got a gap, which you guys hear me blabber all the time about. I require a gap after my zones, but it just didn't continue to push up. You got that one candle, and then even that leg out candle had a really strong wick on top. And then it just based sideways for a few hours. So that to me is going to ixnay this idea right there, just because the leg out, the momentum wasn't that strong. Now it looks a little better when you look at this series of 10 or 12 or 14 candles, but I'm talking the initial move. I want my initial move to be strong. Okay, this is a little better up here, but still you kind of had a little bit of hesitancy here. And you had wicks on top of the candles. So it is a push. It's just not a strong push. Let me see if I can find a better example for you. Better example as far as, zone structure here. Okay, something like this over here. Now this looks a little better. Okay, you see how you get your, I just bit my tongue, that hurt. You get your consolidation, then you get your gap, and then you just have continuous push. That looks better. Or even this right here. Now I wouldn't have sold here for other reasons, but you had a candle down. It just continued a little better. At least 2 to 3 candles, guys, whether it's green or red candles. I want to see at least 2 to 3 candles, regardless of the time frame, that come out with an expanded range look. In other words, it's bigger than the most recent candles. So, there are tons and tons, guys, of supply and demand zones on every single time frame. but a lot of them don't make the cut just because of, again, the strength after the gap, the momentum. Did it break structures? Okay. So as far as gold, yeah, I just don't really like it. If you were asking me about silver, I would like that a little better. Let's go down to silver real quick and get away from the futures. Yeah, because over here on silver, see, this looks a little better. All right, you got your push out, and these candles could have been stronger, but at least they opened and closed higher each time. Okay, on the open and close of the candles, it kept going up. So if I go down to a smaller time frame, it's going to be a series of higher highs and higher lows. If I had a red candle in here, no thanks. But even so, I mean, even after this push out candle, I still would prefer these candles here to at least look like the leg out candle itself. Okay, have a couple 3 candles. That's what really defines a good zone to me. So but again, I would still be interested in at least taking a look at this. Now, we don't have any verification from EdgeFinder. Okay, so I don't want to put out a false signal, but at least this looks a little bit better the part. And one thing I love about trend lines like this is that everybody in the world sees it, including the banks. So for your average trend trader, they're going to be buying on the bounce, right? Well, and then their liquidity is down in this area, right? So I love zones that are just beyond the trend line. Okay, because down here is where your institutions and your banks know that their stop losses are on these trend line buyers or sellers if this were all flipped. And they want to go a little deeper to collect that liquidity and bounce into the zone for the unfilled orders. Guys, this is a really good structure right here. You're in an upwards channel. I mean, I could probably clone this. Okay, there you go. We're basically trading in a channel, are we not? So come down to the lower end, go a little deeper. Okay, kind of like what we had over here. See this liquidity sweep right here? Those liquidity sweeps, I love it when my zones are down there underneath or above if this were a supply zone in a downwards channel. So I don't really do a ton with channels, but when I see an obvious one like that, I do like to draw it out just so I could see where the retail stop losses are, guys. So hopefully that helps somebody out there. Appreciate that. Pound dollar. And by the way, guys, tomorrow I'll be reporting to you guys from Arkansas. I'm going to finish my day and take a little road trip. I got a friend down there. So I'm going to be doing my live streaming. She has an office and then my other job as well from her office. That way I can have a little fun down in Arkansas. Let's go take a look at pound dollar for you. So hopefully my signal should work. She said everything's fine as far as her signal. So I shouldn't have any hiccups or issues. But yeah, I've been stuck in my house too long, so I need to get out of the state for a weekend. Pound dollar, yeah, let's see here. I do want to take a really quick look because we did have some bullish pound news this morning, did we not? Yeah, we had the GDP come out. So that's a little bit of pound strength. Now, I don't think this is updated yet. Let me refresh this. Pound 40%. Because I thought that was what the number was before the number came out. So let me just refresh this. And I got, a few minutes. Oh, okay. Maybe that's what it is. But either way, the dollar, even though it has gotten weaker, just keep in mind it is still stronger than the pound. If we're just isolating the fundamental releases, okay, the reactions to the beating, missing, or meeting expectations. So, that just by itself would give a bearish signal to pound dollar, but we're in an uptrend, are we not? So I did draw up a demand zone down here the other day, which basically aided in breaking through this overhead supply. So break of structure, right? Break of supply and break of structure. So that's a nice, double signal there. So what does that turn this leg into? This series of legs, my impulse leg, right? So that's why I drew up this demand zone that also coincided with a former resistance, former support. So again, all I'm trying to do is stack odds enhancers in my favor, guys. Support, resistance, supply and demand, gaps 2 to 3 candles of momentum coming out of that zone, break of supply in this case, break of structure. When price comes down, I'm looking to get an oversold signal on RSI. And then lastly, I want to make sure my moving averages are looking okay. So on a 4 hour, 50 is over my 200. That's good. But what's a 1 hour going to look like? Okay, so there we go. So we're good on a 1 hour. 50 is above the 200. And lastly, I want it to get pierced. I want the 200 to get pierced, come in here, get a bullish engulfing candle, or just get a 15, 30, 1 hour close bullish, and have some volume spread analysis activity pick up. That sounds like a lot of items, guys, but that's just 12 years of studying, again, to my fault, mostly technicals rather than what I should have been studying, which was the fundamentals and the sentiment. So if there's one thing good coming out of studying the thing that matters the least, it's this. It's just looking at odds enhancers. So, I would be looking for that. Bounce in, bounce out. But we can't do that unless we have a bullish signal. Let's take a look here. Alan, you dodged two. Yeah. Well, yeah, my town of Ottawa, which is where the tornadoes took place. Yeah, the whole south end got just smashed. All my family and friends were safe down there, but yeah, a lot of the landmarks and buildings, they just got trashed. And I'm a little annoyed because I'm 43 years old, guys. I've always wanted to film a tornado, and I have still yet to do it. Even as much time as I spent in Kansas and driving professionally at one point for like 6 years, and I still haven't physically seen a tornado. I saw one that was rain wrapped, and that's about it. So one day I will get one videotaped myself. Epoxy, and just to finish up here, so I learned my supply and demand strategy. So I went to Online Trading Academy. Maybe some of you guys have heard of it. I think they've rebranded to just Trading Academy, but there were like 40 locations at one time throughout the world. I went to the one in Overland Park, Kansas, which is a suburb of Kansas City, in 2014. And there goes my alarm. 2014. So I took stocks first. I retook the class because they give you free lifetime retakes. 2015 is when I studied the Forex class. So I took it and retook it. And then from there, I just started studying like hell, supply and demand zones, good ones, bad ones. Sam Seiden, okay, he used to work on the floor of the Chicago Mercantile Exchange. He's the one that kind of figured it out just based off his physical handling of orders, buy orders and sell orders, and figuring it out. So I mentioned this last week, I think. Go look up Sam Seiden, Seiden, on X, and if you guys are serious about looking deeper into supply and demand, go definitely check his stuff out. I have a few other resources, but I'm out of time. I can definitely show some of those later. Tiger the Storm Chaser. Yeah, that's right, Josh. But anyway, guys, that's about all I have. Seiden's the GOAT. Yes, sir. That's about all I have. So I'll be back tomorrow morning, again, reporting from Arkansas. Good day, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.